TJ the Wheel Joe coming at you live with another episode of Wheelers, special one for you guys. It's going to be another seminar. We're going to go through it, guys, from the A to Z's from wheeling. It's talking about how to set up your hamburger stand. You're going to hear that kind of terminology over and over and over again. How to set up a successful wheeling business. How to learn how to pick the stock, sell put, sell cost, collect premium, roll when it makes dollars and cents. And we're probably going to end right there. We're going to do a lot of examples. A lot of examples today. So there's going to be a lot of drilling, a lot of grilling, a lot of frequently asked questions. But it's not just going to be myself. We got Garcia that's going to be helping me out, and we've got Uzi Options that's going to be helping me out. What's going on, guys?
Hey, bud.
Hey, doing pretty good.
How you doing, man? Good to be here.
Dude, we're doing awesome. So the format is I'm going to go through a segment of the slides. And so I'll put y'all backstage while I go through the segment. And I really need y'all paying attention. And then y'all are going to help me fill in the holes because I'm a human being. I'm not going to be able to touch everything. But between us, I think that we can cover everything. And this is designed for anybody that's new to options or somebody who already has some experience, but they just want to get a little bit better at the game. You know, like we're always trying to hone our craft a little bit. So appreciate the 142 people that have clicked the link on X already, the 77 people rocking with me live.
Nice.
And the other thing is we have it on members only for the chat. Aside from like people can chat from the X side of things. So that we filter out a lot of the repetitive stuff. And this is what I'm going to ask you guys in the chat. It's in your email. It's in your email, Dallas, or I'll put it over here. So let me just go here. Copy. This is for Dallas Matthew. What I'm going to ask you guys to do is please, with the questions, give us time. We're going to get to it. We're going to get to it. Everybody asks the same questions over and over again, dude. We've been doing this for a hot minute. You know what I mean? So just have a little faith in me, have a little faith in us, and we're going to get to it. We're going to get to it. So first thing I want to do while I have you guys on before I put you all backstage is I want to start with a quote, and it is from the Bible. It's Luke 6:38. And it says, the verse reads, give and it will be given to you. A good measure pressed down, shaken together, and running over will be poured into your lap. Guys, that is a biblical principle that I believe with everything that I got. So with my heart, my mind, my soul, I feel like if you go and you put good into the world, good's going to come back to you. It might not happen right at that time. It's not transactional. It's not like I'm going to go give the church $100 and I can expect $1,000. I feel like pastors have kind of like put that a little bit out of context over the years. That's not what it's about. It's about if you have some knowledge that you can pour into someone else, it's going to help them on their journey. This is the way that I looked at it when I figured out that I was pretty good at selling options. I was like, why don't I go spread that knowledge? It's kind of like spreading the good news, right? Evangelism.
Yeah.
And I'm going to go share the good news. This is what I've learned. There's potatoes over here in this field. We can all eat. You know what I'm saying? And I feel like givers gain. Yep. The more I give to you, the more I'm going to gain anyway, whether it's monetarily, spiritually, emotionally, physically, whatever the case may be, whether it might just be a good friendship. I feel like there's a no-lose scenario for me if I pour the knowledge that I have and it comes from a good place in my heart. So that's how I'm wired. A lot of people are not wired like me. Everything is monetary. And, you know, that's how God wired you or you choose to be wired. That's on you. But don't put that shit on me. That's just not the way that I roll. So anyway, let's welcome Dallas. How are you, Dallas?
I'm good, man. Yeah, anytime I'm on I got to be on
your work. Did we lose Dallas? So anyway, guys, so what I'm going to do now is I'm going to load up the seminar.
Can you hear me?
Yeah, I can hear you guys.
Yeah, I was saying anytime I got to use my phone, the link that you sent me in the email doesn't work. That's what I was just saying about the chat.
Right on. So anyway, we're going to get started. Dallas, I appreciate you being able to hop on. We're going to try. Here's the format. I'm going to get through a section. I'm going to read these slides. I'm going to get through a section, and there will be a time where we're able to do live Q&A. So I need y'all to scour the chat so that we can answer all of the questions accordingly, but only if it pertains to that segment. I don't want to be talking about rolling auctions when we're over here talking about the Greeks. You know what I'm saying? Right, we're gonna stay focused because I'm practicing, because one day these are gonna be live. So I need to be able to keep the show moving. You follow me?
Yep.
Let's get into it. Everybody can see, everybody can hear, everything's good. Give me a thumbs up in the chat if the audio is good, the visuals are good, and we're ready to rock and roll. So that's a little bit, this was supposed to be about the background. I'm not going to get into this one too much because you can go watch seminar number 1 for that. But why and how I landed on the wheel strategy, guys. I was in the oil field. I got laid off during COVID. Personal situation that was really, really tough for me to deal with. So I had to step away from that career, but I couldn't step away from the bills. The bills were still coming. That was consistent. So I was like, I need to go find something that could replace oil field income. So I was driving Uber. I was playing poker. I had the wine tour business. And I was like, I want to be in the stock market. I'm already invested with the 401k, with the SEP IRA and things like that. I've been swing trading for years. So I know my way around the market, but I would like to do that as a career. But I was like, how do I go about doing it? So I tried everything. And then I finally landed on the wheel strategy. And then what exactly is a wheel strategy in layman's terms? It's real simple. It's a triple income strategy. You're going to find a stock that you want to own. You're going to sell some cash secured puts. You're going to collect premiums. The first way we get paid. You're essentially getting paid to buy shares at a discount. Once those shares are actually put on you, it's what we call the cash secured put. Then you're going to take ownership of those shares. You're going to agree to sell them for a profit via a covered call. Second way we get paid is the covered call premium. So you got the cash secured put premium, you've got the covered call premium, and then the third way that we get paid is the capital appreciation, the share price. I call it the SPA, the share price appreciation, the money SPA. That's the third way we get paid. So to me, the breadcrumbs are the premiums, and the loaf is the capital appreciation. So to me, the premiums allow you the opportunity to let the investment thesis play out for longer periods of time because you got cash flow coming in, and it's like owning a piece of real estate and you're able to wait 5, 10, 15 years, so to speak. And then you look up one day and you're like, holy shit, and the house has doubled or tripled in value. And that's why people in real estate tend to do very well over longer periods of time because they have a long-term perspective. So how did I land on wanting to be an investor? I was at a Robert Kiyosaki seminar, Rich Dad, Poor Dad author in Dallas, Texas. It was around the time Jeremiah was born. So it was around 2000, 2001. And he talked about this cash flow quadrant. So you have the employees, the self-employed on one side. You got the business owners and the investors on the other side. The employees, the self-employed, they don't have a lot of time. They don't have a lot of money. And I was like, well, those don't appeal to me. Business owners, they got a little bit of time, a little bit of money, but where it's really as in the investors, because they control their time and they control their money. They've learned how to manage. They've learned how to leverage money, time, and people. And it's the American way. It's a principle from the book Think and Grow Rich, where it's like you utilize other people's efforts, other people's money, other people's ideas. You have to be real careful when it comes to other people's opinions because they can kind of like pee on your dreams, so to speak. So that is why I knew that I wanted to play in that quadrant. But the thing is, in order to do that, you got to get your money right. And at the time when I was sitting in this conference in Dallas, Texas, I didn't have money and I didn't have credits. I'm like, well, shoot, how am I going to play in the investor quadrant? I'm not qualified to do this thing yet. So I knew that I was going to have to spend time in other quadrants as an employee, self-employed, and business owner, and eventually graduate to being a full-time investor. And that's the life that I'm blessed to live today. But I had to go up the ladder, so I'm going to give you guys a quote real quick. The elevator to success is out of order, guys. You're going to have to take the stairs. This is not a get rich quick scheme. So I'm not going to blow smoke up your ass tonight. This here is designed to be treated like a business. It's not a hobby. Hobbies will cost you money. A business can make you a ton of money. And that is the way that I treat my wheeling business. This is a question that I get asked a lot. How much money do you need to make 6 figures a year? The answer, in my honest, humble opinion, is $250,000 if you learn how to use margin responsibly to sell options. The goal is to collect 3 to 4% in premiums per month via cash secured puts, cover calls, and/or rolling, and capture 2 to 2.5% in realized premiums on a monthly basis. And this is a table of contents, guys. The mindset, the expectations, key info, find your 5, building your portfolio. All things cash secured puts, covered calls, and rolling, and then the backstop and poor man's covered calls. I don't think we're going to get to number 8 today, and that's intentional. That's going to be part 2. So expectations and mindset, guys. Here's the thing. I can give you the knowledge, but I can't give you the temperament or set your expectations. You need to give yourself at least 3 to 5 years. Rarely do businesses boom after 1 year. So you need to be realistic with your business. And you really have to cure yourself of shiny object syndrome as fast as you can, guys. So that is the thing on setting your expectations. Now I want to go around the room, and I want to start with Dallas, because Dallas and then Uzi, y'all have a lot of experience, and then I'll get to Garcia. But Dallas, tell us just a little bit about your background and how long you've been in investing, and how long did it take you to start seeing the fruits of your labor, if you will? Because I feel like we figure it out up here faster than it actually happens for us, if that makes sense.
Yeah, I've been investing for 5 years. I've been trading for like 2.5 years. But for me, it, in my
Did we lose you?
Yeah, I think it cut off.
Okay. Well, while we're getting Dallas back, Uzi, can you just give us a little bit about your background and how long did it take? Because you have your expectations, right, of how your business is going to perform when you figured out, hey, I can like do options, whether it's buy options, sell options, whatever the case may be. How long did it take for you to actually start seeing some results and you're like, hey, this is feasible, this is a viable business?
Sure. So we got to go way back, though. I know I look like a spring chicken, but I'm definitely no spring chicken. So I started back in the 90s. 96, 95, I started dabbling in call options. Had some decent success. I was running a business that I owned and doing it from my work van. So it was pretty great. And we were in a bull market at the time, so you really couldn't go wrong. And I didn't get like spoiled to the sense where I thought this was going to last forever. I'm going to make my millions of dollars. I knew that, payback always comes around because there is no free lunch. So I did well. And then I wanted to get into day trading of stocks. So long story short, I sold my business. I had enough set aside to go into, educating myself. I had a good friend who was a day trader back then. So I sat with him for about a month as he day traded stocks. And back then it was in fractions. So they traded in fractions, which, now is decimals. So for the first, let's say I went full-time in 98, full-time trading for a living. 98 was still fractions. I think we switched over in 2001, 2002, something like that. And then all shit hit the fan, pardon my French, because I had to relearn how to trade from what was fractions to now decimals. And while you might think, it's all the same, it was really not, because we were, with fractions, we were able to make quarters and halves on 1,000 shares or 2,000 or 10,000 shares. And now we're fighting for pennies. And if you guys trade stocks, even options now are in pennies. Everything was traded in fractions. So we were able to make bigger profits per trade, and not get cut off or cut in front of you by, nickel and diming you by, pennies. But long story short, so I got I got started in the late 90s, mid 90s, and went full time in late 90s. And been in it ever since full time. There's been ups and downs. I've had a couple of losing years throughout that time, of course. But I'd say it took me maybe about 6 months day trading, to begin to earn a solid income. And then when we had the fractions change over from decimals from fractions to decimals, probably another year or two just to get in the groove of how do I make a living when we're fighting now for pennies on trades instead of quarters and halves and sometimes 3/4 of a point. And then I got into full-time options, just doing strictly options in around 2008. I was trading what's called UOA, unusual options activity, doing okay, giving back some, doing okay, making a living, but not enough to, let's say, getting rich. And then I started to get more consistent. And I said, you know what? Why am I always buying options? So I went to the sell side, and it's just a no-brainer now. I mean, it's a no-brainer, night and day. The trading style is completely different. The profits are much more consistent, and it's much more lucrative, for sure.
For sure. Yeah. Garcia, tell us a little bit about your journey. Appreciate you, Uzi. Tell us a little bit about your journey, my man. I've had the pleasure of meeting you personally in Las Vegas. Amit's little get together for his birthday over a year ago.
Mm-hmm. Oh yeah.
And you come a long way. I mean, for just real quick on your background, Garcia did not have his life together financially when he met this beautiful woman that he's now married to, and she basically said, "Hey, you want to be with me? You got to get your money right." So she gave him the SoFi tagline before SoFi was even around. And now Garcia is approaching $400,000 in his portfolio. So let's give it up for Garcia.
Wow, that's great.
Absolutely awesome.
Good job, bro. Good
Take
job.
it away, man. Tell us a little bit
Thank
about
you,
your
guys.
journey so far, and how long did it take for you to really start seeing the fruits of your labor, and then we'll keep going with the seminar.
So I'm looking at the account. It was August 2nd, 2021 when I opened the Robinhood account. And the first couple of years, 2021, 22, 23, I was still trading options. I was trying to buy calls when I thought the market would go up, buy puts when I thought it would go down. And I was just chasing headlines, and not making money that way. And then I started selling some puts, when I got the idea. I started watching your channel and I started doing my own research, but I was doing it the wrong way. I was trying to sell puts on companies that I didn't really have a conviction in. I was kind of chasing premiums. I figured, Marathon is paying good premiums, sold puts on Marathon, the stock tanked. I realized, okay, I really don't want to own this company.
Right.
So earlier, the beginning of 2024 of last year is when I realized, okay, buying calls and all this is not going to work out. I'm just going to start accumulating as many shares as I can in the companies that I have the most conviction in. And, I chose Palantir because of the research that I did back then, but I really didn't expect Palantir to move up that year so quickly. So I do feel like I was fortunate in the timing that it kind of started moving up pretty quickly, but I was prepared to continue to accumulate for years if I had to. But I did start selling puts, started selling calls against that company as well. And looking back after a year, I'm outperforming Palantir by 40%, so the underlying stock has gone up like 350% in the past year. And I'm looking at the portfolio and it's in the 400%, 420% returns in 1 year. So I'm proving to myself that, okay, this is working. I can sell calls, sell puts on the underlying and outperform the underlying stock while holding shares for the long term. When people were telling me all the time, like, oh, good luck, buddy. You're selling calls. You're going to your shares are going to go away. They're going to go bye-bye. And you're not going to make any money off of this. And I mean, I'm proving it to myself. It's not to prove everybody else wrong. It's like, at the end of the day, we do this for us, and our family. But,
Absolutely.
I'm kind of seeing the fruits of the labor now. I'm seeing how I'm managing covered calls when the stock runs up like crazy. And I'm learning the lessons along the way. And it's, I'm sharing the portfolio like on a daily basis. I share it, with full transparency, something that I do appreciate from you. Because I do see that on Twitter a lot, where these guys claim to give you the moon and the stars if you sign up for their subscription service, and they don't show their portfolio. And yet they're charging people a lot of money, for information and signals. For me, I feel like if I could just share my progress transparently, someone with a portfolio who's starting out, they can look at this and say, okay, this is how he's managing these days. This is how he manages a good day, a bad day. This is what he does. So that's kind of what I've been doing now. So.
Hugo Snowball, what's up, my man? I had the pleasure of meeting this man, shaking his hand. The only thing we didn't do is we didn't take the dang photo, so it's almost like it didn't happen. It was with him and with Christian, Option Selling. Do we need to get his ass on the channel one day?
We do.
And we do. We just had a grand old time at Torrey Pines, and we just forgot to snap the pic because we're guys, right? But it's one of those things that before we looked up and an hour and a half had gone by, and it's like, holy shit, and we gotta go. I gotta go. Nice. And then Hugo messages and says, "Did we forgot to take the damn photo?"
Yeah,
you always Photoshop it in, like all these fake gurus, you can Photoshop it.
We were gonna have to do that, man, or maybe when you come to Miami, when you guys all come to Miami, we'll take a real picture.
No, for sure. So anyway, tell us a little bit about your journey, Hugo, and how long did it take you? Because we're talking right now about the segment about realistic expectations. Like,
Yeah.
talk about your expectations versus the reality now that you've been in this game for a hot minute.
100%. I mean, look, I'll keep it quick. I got involved in the markets back in 2012, my first year of college, second year of college. I had an internship with Morgan Stanley, and I was there for the whole summer, and I really learned the fundamentals of the market. Believe it or not, options was not really even talked about, much less covered calls, selling puts in such an institutional company. No mention of it, which looking back now surprises me. So, long story short, I was involved in the markets, much like Garcia was talking and Uzi, really just buying options, which is it's a very directional play. A lot of people are attracted to it because of the outsized returns, but you're really betting on the market going up or going down. Um, so, everybody gets lucky, but then everybody gets humbled, and I got humbled. And so, I dabbled with the market here and there until COVID kind of came around. And during COVID, I had a mentor who I met at a dog park, this 70-year-old guy. He was retired, lived in the penthouse of my building. And I got to talking to him, and um, we hung out a few times, and I asked him, like, what do you do for a living, man? I mean, obviously you're retired, but how do you keep your lifestyle? And he's like, oh, I sell options. And he explained to me what it was. And when he did, I couldn't believe that that was a thing. And more than that, I couldn't believe that I didn't know about it. I haven't been involved in the market for so long. And so then my next step was to read upon read into the wheel strategy. And that kind of opened up Pandora's box. Um, so I've been selling options really as a main strategy now for the past two years, I would say. And again, I mean, I've made mistakes. I've learned having TJ and the rest of the community to bounce ideas off of and kind of grow has been invaluable. But keeping the return expectations, I think, is probably the most important thing, because on social media you see so many of these, 500% returns and 1000% returns in a month, which is it's unreal. It's unsustainable, I want to say, because I mean, it can happen. I'm not saying it won't happen, but if you want to do this for 5, 10, I mean, as Uzi, you've been trading since the 90s. If you want to do it for that long, it's a marathon, right? And you have to have something that's replicable, something you can replicate year over year to double portfolios more than once, like you have, TJ. So that's really what and social media is such a dangerous game, because it skews your returns so much. You're like, damn, I should be having 30% returns in a month. And the risk that you have to take on to do that is incredible, right? And that's the whole point that I like about selling calls and selling puts, is that you can keep your risk profile very tight. You can be comfortable with what you're doing. You can leave your portfolio like TJ does, and let's say go on vacation for a week or two and feel comfortable, not be sweating that you're going to be liquidated a week after. So anyways, to wrap it up, that's kind of my journey.
So I want to piggyback on that, because you made a very, very cogent point there about expectations and what's real and what isn't real. And I know that fluros is a term that Garcia really leans on his ex, because he's a very entertaining follow on X.
Yeah, those memes.
This dude is the king of the gifs, or whatever the hell it's called, gifs.
Yeah,
This dude,
my third language. Yeah,
the memes, or whatever the hell, the Garcia meme. I mean, it is just the funniest shit you're going to see on X. But what I'm saying is, people put out these crazy returns, and they make it sound like you can just extrapolate that data over time. But what they don't realize is there's people like me that have these old KCO calculators on their desk. And if I start annualizing those returns, I'm a billionaire in like the next 6 months, yo. You know what I'm saying? So let's just be realistic. Again, the elevator to success is out of order. You're going to have to take the stairs. Are you going to 10x on some options? I've done it a couple of times. It can happen for you, but is it a system that you can repeatedly accomplish and do over and over? Is it consistent? The answer is absolutely not. If it were, you would already be on an island somewhere. You would already own the island. You know what I mean? So that's why I always say we got to manage those expectations. And I'm not trying to sell courses. I'm not trying to do any of that stuff. I've been documenting this journey going on my 4th year on YouTube because I wanted to give you guys a real life scenario, kind of like my own reality TV show. And I wanted to create a channel where we can all come together as a community. And it's like, hey, we're going to wheeling class today. TJ's live 3 to 5 times a week. And I'm going to do what nobody else is willing to do or able to do. And that's, I'm going to sell options live. And I'm going to show you all my wins. And I'm going to show you all my losses, because I'm going to show you all that I'm not perfect. But if you learn how to hit enough base hits and doubles, you're going to score some runs, and that wins games at the end of the day.
No doubt.
So that is what I wanted to do, is bring that level of transparency so that I could be authentic, because I thought that YouTube was lacking a lot of authenticity. Because I was looking for my channel when I created it, guys. If y'all are ever wondering why this channel exists, is because I couldn't find it and I was looking. I didn't want to have to do this. But it wasn't out there. Everybody wanted me to pay hundreds of dollars, and I'm like, well, or thousands of dollars. I'm like, so that's why you got a big portfolio, because you're just getting a bunch of people to give you a bunch of money. And I'm like, I already got a little bit of money. Well, let me see if I can just grow that, and then that becomes what I'm known for. I don't want to be known for the guy that grifted a bunch of people. And now I have the little membership. There's like 300 people in there. Doesn't add up to a lot of money, but I am now being compensated a little bit because I have invested a lot of time in this thing, and I do put out a lot of value, but I don't ever like just go on here and it's like an infomercial for my membership. Dude, give me a thumbs up if you know that to be true. I don't shove my membership down anybody's throat, dude. Y'all know what you get with the FaceTimes. Tell me whether or not you got value on the FaceTimes. If you don't, well, then you'll quit the membership. But I pour my heart and my soul into these FaceTimes with these people, because I'm like, dude, they're never going to get access to someone like me in the market for a reasonable price. And that is what I'm trying to do, is give people that value, so that whenever somebody else tries to grift them on a super, super high dollar item, they're like, bro, why the hell would I give you that kind of money when there's somebody over here that we can go to the classroom every day when we want to tune in? And this is like, it becomes like that soap opera that if you don't watch it for like 2 months, you watch 1 or 2 episodes, and because I'm going to take you from A to Z on the episode portfolio updates, you're caught up to speed and you know what the play is. So that's kind of what I wanted to do. So let's keep it going, guys. Let's get through some of these mindsets. You got to treat it like a business. Sell, put, sell, cost, collect premium. Roll when it makes dollars and cents. What is the goal? What is the ultimate goal? The game that I'm playing here is I want to get the adjusted cost basis to 0. Knowledge. What exactly is your strategy, and do you know your stocks? Reasonable expectations. Know your time horizon and your income goal. Adequately capitalized. 2.5% in premiums per month is exciting, but then you have projection versus reality. Key information, guys. Key terms. These are things that you're just going to have to know if you're going to be in this game. And I've given y'all some layman's terms definitions here. Strike price. That's a strike. That's the price at which you can buy or sell an asset in an options contract. For a call option, it's the price at which you can buy the underlying asset. For a put option, it's the price at which you can sell it. You have the expiration date. The date in which the specific contract that is sold or bought expires. There's cash secured put. It's getting paid a certain amount of money to buy shares at a discount. A covered call is an option strategy where you own shares of a stock, 100 specifically. You sell call options on those shares. By selling the call option, you earn a premium, which can provide some income. Rolling, closing an existing options position and simultaneously opening a new one, usually with a different strike price or expiration date. This strategy is used to extend the duration of the trade. Expire worthless. An options contract expires worthless when it reaches its expiration date and is out of the money, meaning it has no intrinsic value. Other terms. DTE is days to expiration. It refers to the number of days remaining until the options contract expires. Extrinsic value. Y'all will hear me harp about extrinsic value, and don't let me get my little whiteboard out because I'll confuse the shit out of you. Extrinsic value, also known as time value, is the portion of the options price that exceeds its intrinsic value. LEAP stands for long-term equity anticipation securities. These are options contracts with longer expiration dates, typically ranging from 1 to 3 years. Intrinsic value is the actual value of an options contract based on the difference between the underlying asset's current price and the option strike price. And there's a wash sale. A wash sale in options occurs when an investor sells an option at a loss and then repurchases the same option or a substantially identical one within 30 days before or after the sell. And it also refers to stocks as well. Then I talk about the 50 and the 200-day moving averages. They're commonly used technical indicators in stock and options trading. This is an average price of the stock over the last 50 to 200 trading days. Then you have the RSI, the relative strength index, which is a momentum oscillator used in technical analysis to measure the speed and change of price movements. It ranges from 0 to 100 and is typically plotted on a scale. Out of the money, OTM refers to an options contract that has no intrinsic value. A call option is considered out of the money when the current price of the underlying asset is below the strike price. Bollinger Band, this is one of my favorite technical indicators, guys. These are technical analysis tools used to measure market volatility and identify potential price levels. They consist of 3 lines, the mid, upper, and the lower. At the money refers to an options contract where the current price of the underlying asset is equal to or very close to the strike price. In the money, ITM refers to an options contract that has intrinsic value. A call option is considered in the money when the current price of the underlying asset is above the strike price. And you got your Greeks, guys. These are a set of metrics used in options trading to measure different types of risk and the sensitivity of an options price to various factors. And here's the Greeks real basic. Delta measures the sensitivity of an options price to $1 change in the price of the underlying asset. It can also be viewed as a percentage. So if you have a 30 delta, you can just see that's a 30% chance that that option is going to expire in the money. Gamma measures the rate of change of delta for $1 change in the price of the underlying asset. And when we get through examples, we'll be able to go through all of this a lot more extensively. Theta represents the time decay of an option, indicating how much the price of an option decreases as it approaches expiration. Then you have the rho, measures the sensitivity of an option's price to changes in interest rates. It indicates how much the price of an option would change for a 1% change in interest rates. High IV, implied volatility, refers to a situation where the market expects a significant price movement in the underlying asset over the life of an option. Low IV indicates that the market expects relatively stable prices for the underlying asset over the life of an option. So now we got some frequently asked questions. How are we doing so far? Is there anything that y'all feel that I need to cover on key terms? There's one that I'm considering adding to, and that is expected move. Whenever you enter into an options contract, there is a way to actually calculate the expected move. Some brokerages will actually give it to you, so you don't have to do anything. But I'm gonna put on the expected move. That's essentially like by this date, it's plus or minus 5 or 6%, right? Like that's where they think the expected move is going to be. And sometimes they could go to like 8, 9, 10% if there's like a binary event or earnings or something like that. So that's one key term that I'm looking to add in there. Is there anything else that you guys think that I can add to key terms?
Maybe IV rank, and IV percentile.
I like that. I like that.
Yeah.
And just a simple one would be credits and debits.
Got it.
Mm-hmm.
But I think we got some basics there. I think there's 2 or 3 more that we can add there.
Yep.
Do y'all see anything in the chat? Because I'm not following the chat right now.
George is suggesting the definition of VIX.
Oh, I like that. The volatility index. Love it, George. Definitely. We'll have Alex add that to that because I know how to do some changes on your modifications, but this is Alex's baby. So yeah, I think that's a good one too. Let's keep it going. Finding your 5. Guys, this is the hardest part. But when you can figure this out, these are the menu items for your hamburger stand. You've defined your business and you're ready to make money. It took me about 50 stocks to find mine. Opportunity cost creates the most FOMO, fear of missing out. We don't control pricing in the market. We only control positioning. Stick with your 5 and keep your conviction strong. How do you keep your conviction strong? You got to follow the earnings reports. You got to thumb through the 10Ks, the 10Qs, the filings that they do. Like, right, I put out a filing, yesterday that was really, really pivotal for the company. So you got to stay on top of the news, the current events. You got to figure out what YouTubers that are reliable, that they're covering those stocks on a regular basis. Like if you're in SoFi and if you're not following the Tanners of the world, the data-driven investing, the Tevises of the world, and so on and so forth, dude, you're just making this game harder on yourself. You need to find out who are the little nerds that are covering these stocks religiously. We got our boy Amit and Palantir, right? We got the dude Arnie with the accent. He covers Palantir on a regular. Matt Money covers Palantir on a regular basis. There's several guys that cover Palantir on a regular basis. So you need to follow the people that have taken a very vested interest in those companies to make it easier on yourself, because some people are just gifted at certain things. I can look at an option chain. I could do real quickly, study the M's, and we're going to get into it and know whether or not there's an opportunity there for me to manufacture the win. That's my gift. And controlling my temperament and all that stuff and learning how to make money with the stock. That's what I'm good at. But to go in there and go research Riot from A to Z, I'm gonna lean on Tevis. I'm gonna lean on Bill White. Like, help me out. Like, what the hell's going on with how do I make sense of these metrics? All that stuff, because that's not what I do. I'm a big picture guy. So you gotta lean on your community, guys. So anyway, is there anything else that you guys would like to add right there on finding your five? Because I want to make sure that these slides are stout. If not, that way we can add more to them.
Just one thing that I've learned is be careful who you follow on X, because it can influence your decisions on what you do with the stock. So what I've done, for example, if you can create lists on X, add the people that you've seen have proven to actually have a successful outcome on what they're saying, add them to the list, and then look at that if you're looking to get feedback. Because otherwise, if you run into somebody that's making a good a decent argument on why Tesla's going to go down, it may cause you to maybe sell the puts that you sold or whatever it is, right? And then it turns out that this guy just talks about Tesla going to $50 a share, and you're like, well, why did I pay attention to this guy? So that, I would just add that. To me, that was something that I was catching myself, is be careful who you have on your following list.
Absolutely. Yeah. In the Bible, it calls it protecting your ear gauge and your eye gauge. Mm-hmm. If poop comes into your body, poop's going to come out of your body, right? Like they say, you are what you eat, right? So, like right now I'm looking like a fluffy donut. I started cleaning out my diet and lost like 8 pounds here really, really quickly, and drinking a crap load of water. I put some cucumber in there, put some strawberry to trick myself into thinking it's a Dr. Pepper that I'd much rather be drinking. And now I'm able to drink 2 or 3 of these bad boys a day. And I want to start looking a little bit better, because I already feel better. Now I just want to start looking the part too. It's real important that you're careful as to where you go get that information. So I would ask everybody to you want to pray for discernment. Mm-hmm. You want to pray for discernment. You want to have a discerning ear. You want to have a discerning heart, a discerning eye, because I feel like there's a lot of people that maybe they're just more interested in like sounding smart and looking the part than actually being the part.
Yep.
And you've been in this game a long time, Uzi. Am I out of line in saying that?
No, 110%. And just to touch base on what you did say about finding your five, I love that solid idea. You never know when you're one of those five might run into, let's say, a fundamental issue with earnings or with bad news. Like, was it Crowdsource had that bad news one day, and the stock dropped like 20% overnight, and then it floundered for weeks and maybe a couple months. I would suggest maybe to also keep another 3 to 5 just on like a side page or a side notebook, where you just try to get a feel for them. Keep an eye, keep a couple as backups, just in case one of your top fives does run into a somewhat of a difficult period, and you can't find the premium there to sell, and it turns into a low IVA situation. You can sell iron condors at that point, but if you're not into iron condors, or you're not into getting into some of the more difficult trades,
butterfly, jade lizard, oh boy, let me call option. You can guide us through that stuff.
Those are all the things we're doing. Yeah, sure. But yeah, I like the solid five idea, and then just have a couple of, and just in case, like backups.
Absolutely. And when I have a 5, it's like I have another 5 because it's just other stocks in those sectors.
Right.
You
Yep.
know, because it's like, you're picking a horse race. It's like a 3-horse race, so to speak, right? You have win, place, and show. So it's like in the minors, I have Riot, Clean Spark, Marathon, and the order changes in my mind a lot. I'm more heavily invested in Riot, but I don't sleep on Marathon and Clean Spark. I believe I've been able to break bread with Jason, so to speak, right? So I'm going to have more of an affinity to Riot, but at the same time, I can't disregard that. I really like the way that CleanSpark handled their convertible note, and I really, you can't disregard the fact that Marathon mines more coins than they all do. You know what I'm saying?
Yeah.
Like that. Whether or not, I agree with Fred selling a shitload of stock today because he did. That's a conversation for another day. Garcia, anything that you'd like to add on finding your 5?
No, not on the 5, but I do like your third point where it says we don't control pricing in the market, we only control positioning. Like that's something that has been in my mind a lot, where people ask me, oh, where do you think Palantir is going tomorrow, or where do you think Rocket Lab is going tomorrow, next week?
No
And
idea.
I always tell them I don't know. Like I never know what's going to happen in the short term. Like I know in the long term their earnings are going to follow, they're going to grow, and the company will go up over time. But I never position my portfolio because I'm going to make a bet on what the stock is going to do tomorrow or next week. I position my covered calls and cash geared puts to kind of create this, just as the stock bounces around, I'm taking profits on the calls, taking profits on the puts, and I'm just kind of readjusting as the stock goes up and down. Like Rocket Lab went up 30%, yesterday. I didn't have covered calls, but I did sell some at 10%. And once it went up another 20%, I'm just kind of watching them, but I didn't sell them because I knew it was going to go right back down. I'm just readjusting my portfolio as the stocks go up and down. I'm more reacting to what the stock is doing. And that's what I really do like about this strategy, is that it does allow you to be more reactive instead of trying to predict or trying to be proactive on what the market is going to do. Like I just think it's not as consistent.
Absolutely. Let's keep it going, guys. How do you find your 5? Ask yourself, who runs the company? What am I interested in? Why? Because I'll be willing to study those companies. How big is the market? I mean, keep in mind, guys, I say this a lot, you can't borrow conviction. Yep. And then these are the things that I ask myself. Like when I start, when I land on the Riots of the world, when I land on the SoFis of the world, it's going to always come down to this. Once I've formed an investment thesis and there's conviction, now it has to meet these parameters for me. Can your stock 2x in the market, in market cap within the next 3 to 5 years? That's really, really important. Why? Because I'm trying to beat the major indices. If not, what are we doing here? And then this is another one that you don't control. So it either does it or it doesn't. And it has to do with their IV rank, right? Can your stock pay you 25 to 40% in premium annualized? A lot of stocks cannot. So that metric automatically does not qualify them to be a menu item in my hamburger stand. Keep in mind, these are my metrics, my parameters. They don't have to be yours. Just keep that in mind. And then this is the hardest one right here, the range. What am I willing to pay for the stock? That is not a science. That is an art form. Yep. That is an art form. And I'm going to give you guys an example. We're going to give you all some concrete examples right now. Garcia is all over Rocket Labs right now. Guys, you paid me money to go buy Rocket Labs at these levels. It's going to be very hard to buy it with your money because I don't understand it enough. So I cannot borrow Garcia's conviction to go buy Rocket Labs. He's done the work. He's done the DD. And for him to make a switch from Palantir, a surefire $1 trillion company in my mind, and go over there and play Rocket Man with Rocket Labs in a big, big way, that speaks to his level of conviction because of the due diligence that he did. So he's being rewarded with the win. Does that make sense? Give me a thumbs up if you haven't made the kind of money on Riot that I've made. And then give me another thumbs up if you're willing to admit that you haven't done nearly the due diligence on that company that I've done, that I continue to do. I have watched, my God, like 30 interviews of Jason Less. And I'm like learning about this cat. And I'm just like, okay, dude, this dude's an awesome poker player. Let's see how he is as a CEO. Does the story change? And this dude has been saying the same thing for the last 3 years. And it's all starting to come to fruition. So I have a long time horizon or a time frame that I can judge his words with the company's actions, if that makes sense. So that's how you like really dig into this company, kind of like Alex Karp. I mean, type Karp in the comments if you've seen 20 or 30 interviews of this man. It's so captivating when he speaks. Every time he speaks, I learn a new word. The first word he taught me was derided. You know what I'm saying? I was like, wait, what? You know what I'm saying? And I was just like, hold on, bro. I didn't go to Stanford like you did. Let me talk to Kristen real quick. You know what I'm saying? Like this dude's using shit that I don't use in my everyday language. So I was just like, man, so you dig into these companies and then that gives you the conviction. Because you got to be able to ride out the storms with these things. Like everybody wants to go to the Sunny and 75 situation, but those Sunny and 75 scenarios, ideal conditions, those don't really exist. Those are created. Like I have a Sunny and 75 situation with SoFi and right now, but I kind of created that for myself because it wasn't always that way. Mm-hmm. It wasn't. Do y'all want to add any color to that so we can move on to the next slide?
No, I mean the research part is spot on. It's the conviction because it's really, and I always see it when when Rocket Lab was having pretty bad days, I'd see Garcia just taking bites out of Rocket Lab, and that kind of turned me on to Rocket Lab and be like, well, let me see what it is that he sees, because it goes hand in hand. When you have that conviction, then you perfect the art of what you pay for the stock, right? Because you're able to pinpoint when it's a deal versus when it's a risk. So that's just what I would add to that.
Absolutely. Let's keep it going, guys. So here's some examples. So I literally just updated these with Uzi. You saw me do it, right, Uzi?
I did.
So these are examples. What's my buy? What's my steal? This is right now before we did this. So to me, SoFi is a buy at 250 or Tesla's a buy at 250. It's a steal at 200. I don't know if we're ever going to see those levels again, but those are the levels that I'm looking at if I want to add to the position, because I already have positions in all of these except for Palantir right now. SoFi is a buy at 15. It's a steal at 12. Riot is a buy at 10. It's a steal at 8. Palantir is a buy at 40, a steal at 30. I don't know if we're ever going to see those numbers again. So if Palantir keeps proving itself and creating another base here in the $60, $70 range, then at some point I have to increase my price targets. It's kind of like you're an analyst. You're an analyst of your own portfolio and your own watch list, if that makes sense. And then I think PayPal is a buy at 70 and it's a steal at 60. I don't know. Right now it's at 90, right? So everything, what am I saying? Everything's frothy in the market. Everything's frothy in the market. So I'm not going bonkers selling cash secured puts over here at these levels, because I don't want to get caught bag holding. You know what I mean? Like I want to see some earnings reports. I want to see like where we're at with the hype versus reality when it comes to Tesla. How real is this Optimus thing? Because it might have just been a tweet. It might have just been a snippet of an interview. Like earnings reports are coming. Earnings calls are coming. Elon's going to have to defend some really shitty delivery numbers here very, very soon. So I'm kind of laying back. I thought about spending $700,000 today to buy back covered calls, but I'm like, wait, hold on a second. They just missed deliveries. Let's see how that pans out first, because maybe I only have to spend $500,000 to buy back those covered calls. You know what I'm saying? Like, we'll see what happens. We'll see what happens.
Especially with the run up it's had since the election and then post election. Yeah. So you got a good shot.
Yeah, absolutely. So there's that. Now, study your M's, guys. The M's of the business. Moat, long-term competitive advantage, money, valuation, multiple sectors, financials. You got to study the money, different aspects of the money, market sentiment, because this drives price more than anything else. The news and the market sentiment is the attitude of the market makers towards the stock. And then the management, are they experienced? I mean, are they competent? And what's their compensation plan? Why is that important? Because I want to know whether or not we're on the same team. We're rowing in the same direction. Is the share price appreciation directly correlated to your compensation? If it is, a la Anthony Noto, a la Jason Less, I feel like we're on the same team. You're not just drawing a big fat fucking salary. And I'm kind of trying to figure out my situation, because if you want to go grab the bag, the stock price has to perform. That's the kind of stock that I look to invest in. Give me a thumbs up if that makes sense to you. Elon Musk needed Tesla to go up in price in order for him to go grab the bag that he's fighting for in court, right? He had a 10x the company. I mean, y'all know that? Like, y'all realize what this man had to do? And now it becomes a situation like, hey, pay that man his money. Pay that man his money. Tesla wouldn't even be here if it hadn't been for his efforts. And people are talking about, why is he worth, why are they going 56 billion or whatever the crazy number is? Because Tesla might have gone through a bankruptcy had it not been for Elon Musk and his creativity, practically getting on his knees to beg investors to invest in Tesla. I mean, y'all got to really dig into these companies, dude. Tesla is not an accident. Not an accident. There's a lot of blood, sweat, and tears that went into this thing, and they're just getting started, in my opinion. That's what's scary about the whole thing. Like, look at all that they've done, and I think that it's nothing. It pales in comparison. It pales in comparison to what I think they're going to do. Somebody's asking, how would you rate the M's management? Because I feel like whenever you invest in a company, you're giving money to management, and you're asking them to be stewards of your money.
Yep.
That's just me. So management is the most important M. So I feel like maybe we're going to flip-flop the order of that slide right there, because I think the reason I put it at the bottom, because I wanted to leave the best for last, if that makes sense. But I almost feel like management needs to be the first one and the last one. So I think it deserves to be up there twice. Go ahead, Hugo.
No, I just want to add that in the management part, I think it's important to look at how much of the business they own as well, and if they've sold in recently or if they bought recently. You have to decipher the story, but it is important to look at that too.
Absolutely, man. You know, people sell for a multitude of factors and reasons. They only buy for one.
Bingo. Yeah.
They buy because it's going up and to the right in their mind. That's it. You know, I look at, Jason, he sold shares recently. Is this just going to be an ongoing thing, or we don't know what's going on in his personal life, right? We don't know him like that. But Anthony Noto bought recently, and then instead of selling, he got into some unique situation where he almost did like a cap call on his shares and all this, because he wasn't ready to quite let him go. So we don't really know exactly what went on there, because they did what SoFi does. They create situations that are very confusing for the average investor. Remember the way they handled that situation about a year ago? When they were doing like restructuring some notes or whatever, and then you have the data-driven investing and Tevis and Tanner and all these nerds trying to make sense of this shit. When they're struggling, bro, it's complicated. When they have to make multiple videos out of something, out of the same content, that it's complicated. And I feel like that's what Anthony Noto just did with his situation. And now it might sound easy because they've had time to figure it out, but I feel like that's the one thing that's tough with SoFi is I feel like they leave you confused a lot of times as an investor. Keeping it going. Building your portfolio, guys. Now, how do you build your portfolio? Example, 100,000 portfolio. You can be real OCD, 25, 25, 25, 25, 33, 33, 33. You have conviction versus cost. Higher the conviction equals higher cost typically for a stock. And then the way that I build a portfolio is I utilize the 25, 25, 50 strategy. Is if stock is high, apply 25% of what you would like to have. And if the stock price drops and conviction is still high, deploy the second 25% and so on and so forth. So example, if the stock's at 10, let's just say it's right. The stock's at like 12 bucks or 13, whatever it is. I deploy the first 25%. Let's just say it's 100 grand. So I'm like, I want to buy $25,000 worth of ride at like 11 bucks. If it dips to 9, I'll buy another $25,000 worth. And if it dips to 7, then I'll buy $50,000 worth because I want to buy the majority of the shares at the lowest price so that I could have the lowest average. And that's how it makes it easier for me to manufacture the win. So you have to be very, very judicious on how you allocate capital because we're not the Fed. We just can't print more money. Anything that you guys would like to add right here?
No, but you know what, TJ, I should have asked you before that, before you just cut to this new segment. I just want to bring up one point, and it's not a morbid point, and it's not to be fear mongering, but like Apple, when they had Steve Jobs, I guess they knew that they had Tim Cook as a backup. With Tesla, if you're going to have, let's say, a top 5 and put, you know, whether it's $250,000 or $5 million into Tesla stock, who's the backup guy? God forbid something happens to Musk, because knowing how much they dislike the current administration, and now Musk is in the administration, if something were to happen to him, I don't know what happens to all of his companies, to be honest with you. And
sure. So that's called keyman risk, right? And I have talked about this ad nauseum with other investors, and this is what we've concluded with conversations that I've been a part of. There's not enough hours in the day for Elon to do everything. I think Elon's going to go down as probably being the master delegator of this generation. He ain't out there designing the rocket ships, bro, that they're catching boosters and shit. There's not enough hours in the day to do all that stuff. I think he's the big picture guy, and he knows how to hire the people that can execute. I think that there's other people that are already running Tesla. He's got his right-hand man. You know, he's got his right-hand men. I don't exactly know who those people are. I would lean on a channel like Farzad's that covers Tesla on a regular basis. There's that gentleman, I think Warren Redledge or something like that. He covers Tesla on a daily basis. So I would, again, go to channels that cover these stocks on a regular basis and start getting answers to those questions to see if you could be comfortable. Because I'd reach out to Carlos and Tevez because they have big stakes in these companies. I believe that Tesla would drop at least 30 to 50% if something happened to Elon Musk. But I also think that the drop would be temporary because I think Tesla is able to stand on its own merits at some point. I'm not saying that the drop wouldn't be sustained. It would be substantial, but I think that at some point they're going to be like, okay, well, FSD still happened, or the Optimus still happened. You know, the energy sector is still growing, and all these other verticals that Tesla's got going on. So I think that Tesla can be judged for what Tesla is doing and not just so much Elon Musk anymore. But it's gotten to that level of maturity, in my opinion. And then, like, I looked at Alex Karp as a key man risk, and I'd like Garcia to speak to this point. But I looked at Alex Karp as a key man risk because I can't picture anybody else being the CEO of that company. But if you go on a Mitt's channel, he's had other palantards on there, and they can name 3 or 4 other people that they think that can run that company already because they're in the know. They're in the know. So it's just, you know, it's one of those things. It's just like, to me, I thought that Anthony Noto was a serious key man risk with SoFi. And I'm like, dude, I kind of like that dude from Galileo, the bald dude. I think his name's Derek. I'm like, dude, he's well-spoken. I could see him moving the needle, and he's a little bit more cheerleader pom-pom guy. He might actually be better for the stock than Anthony Noto. You know what I'm saying? It gives me more reason to want to look at the company more so than the people, because I think you start with the management, but at some point you're investing in businesses, right? Warren Buffett said we're investing in businesses.
Mm-hmm.
So I think you got to like decide, do you really have a business here? And why do I like the Bitcoin miners so much? Because they're tied to Bitcoin. They ain't tied to Jason Les. They ain't tied to Fred Thiel. Bitcoin's a lot bigger than these guys. So I don't think the Bitcoin miners have key man risk. And that excites me. I love that Jason is friendly and he'll go on these channels and he'll make the rounds. And it's a very, very likable human being. But dude, he ain't shit compared to Bitcoin. You know what I'm saying? So I love that I don't have key man risk with one of my favorite companies. I don't want anybody to replace him because it's awesome to have somebody that would come on our little channel and he makes rounds on all the other channels. So he keeps us in the know. He keeps us in the loop, which is really, really cool. Like super, super cool. Because Anthony Nono ain't going to do it. I wish he would. I think it'd be really, really good for the community if he would. But maybe he's just got better shit to do. I don't know, right? I don't know. Garcia, what do you think about that with the keyman risk and stuff? Because you're in a company where I think it had huge keyman risk, but somehow you've stayed comfortable.
Yeah, like Sham Sankar, he's the obvious, second choice. Because I hear his interviews and the way he talks with like government officials and all that, and it's just I could see him kind of pushing the company. And I went to their headquarters. I was invited to the headquarters by Eliana, so I was actually able to meet some of the founders, some of the employees and stuff. And the company culture permeates from top to bottom. Like
Right.
From all the engineers that I spoke with, all the people that I spoke with, they all have that same vision, that same drive. So that put my mind at ease, where I'm like, okay, so if Carp wasn't there anymore, they're going to continue with that same type of mentality because it's already part of their culture, and they're going to continue, they're going to continue that. So for me, I don't have that fear with the keyman risk.
Yeah, absolutely. So now let's start your wheel, guys. Let's get into meat and potatoes time. I think we're good. Let's just look at it. We're at the restaurant. Everybody's had some drinks. We've got some appetizers. Now let's eat. Let's do this thing. Let's start your wheel. Guys, you got to land on a strategy. You can do cash secure puts. You can do the buy right strategy or the strangle. I utilize all three of these just depending on where I'm at with the underlying, where I'm at with the investment versus the investigation. Because you have the investment, then you have the investigation that gives you the investment thesis and the conviction. Oftentimes, you're never done investigating, right? You're never done with the research. But at some point, you got to pull the trigger. If not, might as well just be the Everything Money channel. I'm real good at talking about stocks, never buy anything. You know what I'm saying? Everything's overpriced. Yeah. My goodness. So, I just rely on the 7 or 8 businesses that I have upstairs or whatever it is. So, anyway, that's just a dig at Paul Gabriel. Really, really smart dude. I think he just makes a lot of money selling software. So, we've got the cash secure put, we got the buy right, we got the strangle. Cash secure put, get paid money to buy shares at a discount. Buy right, high conviction, low cost. Buy shares outright and sell covered calls. Start collecting premiums. The strangle, the covered strangle. Sell cash secure puts, 20 to 30 delta, repeat 2 or 3 times, buy 100 shares, sell the covered calls. If the stock tanks, don't take ownership of more shares till it drops to 20% because I'm already implementing the 25, 25, 50 strategy there. Now let's get into it. All things cash secure puts, guys. What is a cash secure put? You're going to get paid money up front for agreeing to buy 100 shares of a stock you want to own anyway, but at a discount of today's prices. How do you decide on a strike and an expiration date? The answer is it depends. Do you want to own the shares soon, or are you just cash grabbing? What do I mean by that for you guys? Let's start top to bottom. Garcia, what do I mean by that? Do you want to own the shares soon, or are you just cash grabbing?
For me, cash grabbing is like you just want to collect the premium without the, you don't want to commit to owning shares of the stock. You just want to take advantage of the IV and the theta decay, but it's kind of like you're dating and you don't want to commit. That's kind of the way I understand cash grabbing.
To me, it's just a tool. It's just a trade. You don't want it to turn into an investment. There's an opportunity to tie up money for a certain amount of time, and they're going to pay you money up front, a cash on cash return, a COC, and you're good. But you don't want to put a ring on her finger. She's already giving you the milk. You don't want to buy the cat. That's cash grabbing in a nutshell. Uzi.
Yeah, listen, if I want to own something right now, I'm going to sell an in the money put at a price, with a sign-in price that I'm comfortable in owning it. And again, I'll sell it in the money a couple of strikes in if I really, really want it. This way, he doesn't have a chance of getting away by the expiration that I just sold. So if I sell a 3-day till expiration in the money put, I'm going to make sure it's deep enough in the money that it doesn't have a chance of wiggling its way out. And I wanted to own it this week, and I get I can't get it because it covered above the price. Now we got to try again next week. So if I really want to own it instead of a cash grab, I'm going to sell it in the money put. That's how I would do it.
Absolutely, Hugo.
Look, those are all. Everybody had great points. I'll add one thing, which is it all kind of ties in together, right? You choose your 5 stocks. you know how that stock moves to certain types of news. You know it like the back of your hand. And
Yeah.
cash secured puts allows you to really cash in on that, right? So if you see a stock correct to a price point where you know it's unrealistic for that stock because you've been tracking it for so long, why wouldn't you want to take advantage of that? And cash secured puts is a way to do it.
And that's the reason why I say you got to find your five, because if you're going to really learn how these horses move, how these stocks move, it's virtually impossible unless you're using like artificial intelligence to help you out and stuff to really get comfortable with like, well, how does SoFi react when SoFi doesn't have a triple beat and raises guidance? Because we haven't been to that movie yet, have we? So we don't know. The answer is we don't know. Chris from Data Driven Investing is going to give us his best guess. Tanner's going to give us his best guess, but they don't know either. Neither does my boy Roy. Tevis, they don't know because we haven't been to that movie yet. So how do I know that? Because I'm familiar with that stock. So you're only going to be able to be that familiar with so many stocks, is what I'm saying. That's why it's very, very important to find your five. So I say this is a hamburger stand, and I'm like, I got my hamburgers, my hot dogs, because that's what moves, and then you got the chips and the soda and maybe a candy or whatever, right? Stuff that moves. That's where your bread is buttered. That is what's ringing the cash register over and over again is my five. That's what's ringing the cash register. That's my go-to move. It's the first thing and the last thing that I look at, and in the middle when I open up the portfolio. And if I don't see anything there, then you go to your watch list. But I always look for the opportunity with my five. That way, it's just a very repetitive business, and I know that I'm going to ring the cash register week after week, month after month, year after year. So there's that. So, the strike price for SoFi is 11. You could pay 12 to 14, 3 to 5 years, 50 to 75. This is giving you examples. Pros versus cons, though. You get paid to own at a discount. You're always in a glorified cash position, and you get paid to study the stock. That's what I love about cash secured puts is you get to make a little bit of money while you're doing the homework. You're not really ready to take a big position in this stock. You're just kind of nibbling. It's a first date. It's a first day. You don't want to go to Jared like I did and buy this crazy ass ring. You're not ready. You're not ready for all that yet. You don't know how many kids she has, different fathers. What's her situation? We don't know anything about the stock yet. We haven't been through 3 or 4 or 5 earnings reports yet. We don't know. But we know that we're interested in. So a cash secured put is a nice place to start if you're interested in. What are the cons, though? The only money that you can make is the premium. So to Uzi's point, the stock could get away from you, and you never have the chance to actually take ownership. And also, the other con is very similar to owning the shares. If the stock tanks, you're stuck at your strike unless you roll. That's the biggest con there. Is if you're just kind of feeling it out. You didn't really want to own it, but because the commitment is so substantial, because it's for 100 shares, that's not usually a starter position for a lot of people in the stock market. A lot of people don't talk about that enough. It's when you sell cash secured puts, it's a pretty serious position. It's a pretty serious commitment. And we're talking about Tesla at $350 because it's a $35,000 bill that you are committing to buy those shares at that price. And that's why they pay you such a substantial premium. So the risk is if you're just cash grabbing and then Tesla goes to $250, now you have a shotgun wedding on your hands because now you're marrying this chick and you don't even know if she's a good kisser yet. My goodness, dude, it could get dicey for you. I'm just saying, let's talk about it in terms that we can all relate to.
And it did, TJ. Remember when Tesla was well above 200 and it fell to 150? A lot of guys got quiet on Twitter. Because everyone was owning it, and it was a real tough time for them. Now thank goodness they got made whole. Thank goodness.
Absolutely. So, to me, the biggest thing though with cash secured puts, and I love them. That's my bread and butter. But I do feel like you have basically said, I don't want to make crazy amounts of money with my portfolio right now. I just need the steady cash flow. It's like income replacement. Mm-hmm. So for about 40% of the portfolio, I just treat it as like income manufacturing. So I sell cash secured put. It's like I know what I'm going to make. It's slow and steady, and it's going to win the race. But I'm not going to put all the money into shares and leaps where I can, have the crazy returns that are going to put me on the map on X and all that stuff, because I'm not willing. Because I feel like I'm gambling a little bit more over there. Whereas with cash secured puts, it's more of a calculated gamble, if that makes sense.
Yep.
And at the end of the day, I'm a bargain hunter. I want to buy shares at a discount and to today's prices. In comparison to today's prices. And if I'm able to do that successfully over and over, not take ownership, the reason that I love cash secured puts so much is because it is a glorified cash position at the end of the day, and you're always prepared to go buy the massive dip if and when it happens. And it might be on that stock that you just sold the cash secured put on, if you're managing your bankroll accordingly. Because the thing that works, that makes this whole thing work, is your bankroll management. A lot of you guys are in situations right now where you're underwater with stocks, and it's because you just didn't manage your bankroll, or your bankroll wasn't big enough. You're undercapitalized to begin with. You're playing too big with a portfolio that's too small. That's another quote for you guys that can really be a nice teaching segment for you. But you don't want to play too big with a portfolio that is too small. And I'm hoping that I have this thing called Rule of 500 here at some point. So let's get deeper into cash secured puts. Mathematically, weeklies pay a little bit more money on an annualized basis. Why is that? Because it's more work, guys. And the Greek's more volatile. That being said, I typically like 30 to 40, 45 days out, managing 21 days to expiration. It's the tasty trade way. The goal is to capture 70 to 75% of the initial premiums collected. They preach get out of there at 50%. I try to squeeze out that extra percent if I'm legitimately comfortable with the strike price that I'm at. If I'm cash grabbing, I try to get out of there at 50% and move on to another cash grab, because I'm not trying to get caught. I sell cash secured puts at 20 to 40 deltas. 20 is typically for cash grabbing. If I want to own, it's going to be closer to at the money, and that's going to be around the 40 to delta. If I think the stock will go up, I trade closer to 40 to maximize premiums. The RSI is 30 to 35, meaning it's a bit oversold. And you want to stay away from binary events unless you're comfortable with assignment. So if earnings are around the corner, the Fed's going to speak or something like that, you might not want to have a cash secured put on and the expiration dates on the other side of that binary event, because the expected move is going to be a lot more volatile, if that makes sense. Is there anything that you guys would like to add to these right here? And then whenever we're done with cash secured puts, I'm going to give you guys some actual examples. You'll pull up the portfolio and we'll give you some examples of cash secured puts and I took them and so on and so forth.
Yeah, I mean, you nailed it. You nailed it, DJ. I mean, especially with the binary event issue, and keeping an eye on really where your stocks are coming in with their earnings. Now, not to be a contrarian on that, but we actually, in my Discord, we actually specialize in earnings trade. Believe it or not, what we do is we calculate everything to do with that binary event, and I kind of use that as a tool in a sense where, any day we wake up, we could have like CrowdStrike had that one day. There could be news event like a binary event that comes out of nowhere and catch you unguarded. The one thing about earnings, if you go into it with the right tools and the right analysis, you can actually prevent the major catastrophes by taking into consideration everything: technical analysis, supply and resistance, and also where it's fallen in the past when it's had, let's say, poor earnings. So if you add up all your different steps and data along the way, you can actually take that binary risk out from earnings. But I agree with you on the whole, binary events can come back to haunt you, especially when you're selling puts or naked calls for that matter. Sure.
Yeah, absolutely. Anything you'd like to add, Garcia or Hugo, so we can move on to the next slide?
No, everything looks good. Yeah, I like it.
Keep it going. Pick and strike with technicals. I want to sell a cash secured put below the 200-day moving average. That's just me. Again, guys, these are my guidelines and my rules, but you got to formulate your own wheeling plan. So I never tell people to do exactly what I do. I mean, I would, because I'm confident in what I do, right? But what I'm saying is you got to figure out who you're going to be in the market and how you're going to play this thing. If it's already under the 200-day moving average, I look at the 50-day moving average. If that doesn't work, I look at the 20-day moving average. Truth be told, if that doesn't work, maybe I just need to go somewhere else. When using the Bollinger Bands, I want to be on the lower end. So it's just real simple for me on technical analysis, but it's also just following these stocks, having them on your radar. And then it's just like Hugo was saying, at some point, you just learn how these things move. And what moves them, like I already know that if an analyst goes and talks shit about SoFi, I can expect a 10% drop pretty quickly, but it tends to recover because SoFi is able to stand on its own merits now because the story keeps getting better and the numbers hopefully are going to come in pretty good to substantiate that story. And then it starts forming a nicer foundation here into 15s. I think that 15 is the new floor for SoFi. When to take assignment? I prefer to take assignment when the dollar amount I'm down on the shares is less than the premiums I've collected. I'm going to say that again, and I'm going to show you all some examples. I prefer to take assignment when the dollar amount I'm down on the shares is less than the premiums I've collected. I close if 75% profit has been reached and 25% of the time is left, and if you have somewhere else to put the money into. If not, leave it alone. I've started making a lot more money letting things right out to expiration because I wasn't able to take another trade. So why am I going to give back $200? Because normally I sell in 200 contract increments. So I'm like, well, dude, if I'm doing that 1,000 times a year, my goodness, that's a lot of money. If I don't have another trade that I can take, I'm not giving you back that dollar, especially if I'm okay with assignment. So when you are okay with assignment, you end up keeping a lot more of your premiums.
Yep.
It's the people that are not okay with assignments, this math never works for them because they're lacking one key component to this whole thing, and that is conviction. You need to go find your five ride or dies. And it's almost like, dude, I really don't even feel like selling cash secured puts. I'd rather I want to own some shares. That way I can sell covered calls against those shares while simultaneously selling cash secured puts, because when there's conviction, you'll know it because you're going to be running the covered strangle because that one makes the most dollars and cents. Because you're playing both sides now and you're guaranteed to be winning one side of the trade and you're going to manage the other one. We're going to talk about the covered strangle here in just a second. Stick with us. Give us a thumbs up if you're getting any value, guys, because we're really giving y'all some information here. And I'm going to get with little Alex. We're going to put these slides on the description just to make sure that you guys can't edit it or whatever, because I don't want it to go back. And then now it's like, oh, shit, I lost my slideshow. You know what I'm saying? So give us a thumbs up if you guys are getting any value out of this thing, because there's a lot of people watching for our channel. We got 2238 that have seen the link on X. 4 people are on Garcia's channel. They got 157 on our channel as well. So when do I roll my cash secured put? Roll if you're looking to get out of the position because the thesis changed or your preferred entry point has changed and you want to renegotiate. I mean, guys, it's okay to change your mind if you have new information. It's okay to change your mind altogether. You know, imagine being on a date and then her ex is blowing up her phone. Don't you have the right to change your mind and be like, hey, I'm not gonna hang out with this girl anymore. It's not good here. You're just dabbling. You sold your first cash secured put, and then all of a sudden some news breaks out, and you're like, I don't want any part of it. Let's just say it's SMCI. And then now they're like, oh, we're not really going to do earnings right now because there's some issue because the accounting firm quit or whatever. You're like, hey, dude, let me just take my lumps here. Let the story play out. We'll live to fight another day. It happened to me with MSTX, right? They did that little dividend and stuff. And I was like, but dude, there's too much money on the line. I was playing too big. Let me just take my lumps. I'll have a tax harvest loss. I'll revisit this situation February 2nd or 3rd when I'm done with that probationary period. If the trade's still there, fantastic. We can dance again. But now I have more info. If not, I'm just going to stay in my lane with the miners. That's it. Anything else that you guys would like to add here? We'll go top to bottom, Garcia.
No, for me, I usually don't take assignment on cash secured puts too often. So this is not much of what I'm used to. What
about you, Uzi?
Yeah, I usually I try not to. I mean, I prefer to just do cash grabs unless I really like a stock, or if there's a situation where I got caught, and then I'll just take assignment. But just to your point, though, that's one of the reasons it's really important to never go over, let's say, 50 to 60% of your total account. You know, a lot of guys may have a large account, or and they find themselves using 75, 80% of their cash, and then when they need cash, they don't have it for when that stock does get hit, or other stocks take a hit, or the market has a 10, 15% correction, which we haven't really seen in a while. And when it comes, people that are overextended in their positions, they're going to wish they had some cash.
Mhm.
Absolutely. Hugo? Your mic. There we go.
For some reason, I've realized that rolling your cash secure puts is a lot easier than rolling your calls.
Laws
So
of
I
gravity, baby. Laws of gravity.
laws of gravity. So I generally would rather just roll down unless it's a, it's a steal. But yeah, usually I if I want to buy, I just straight up buy it. Cash secure puts is just to generate cash.
Absolutely. And we're going to do examples of cash secure puts. We're going to get into this thing, guys, but we got to get people up to speed. There's a lot of newer people in the channel over the last 90 days. So a lot of this is for them. I'll pull up the portfolio in a second, and we'll go through scenarios where I'm okay with assignment, I'm not okay with assignment. This is why I took the trade here, etc. So that we can really do more drilling and grilling, if that makes sense. So keeping it going, guys. Keeping it going. So we talked about it. Roll if you're looking to get out of the position, renegotiate. Cash puts for cash grabbing. I'm looking for about 30% a year, grow my cash balance. If assigned, sell cover calls until they're called away. So when I say that I'm cash grabbing, that means that I'm legitimately wheeling the stock. I'm going to sell the cash secure puts. If things are like real dicey, like I got assigned at 10, my break even was like 920. The stock's trading at like 980. I may choose to take assignment there and just sell cover calls very aggressively at 10, maybe 1050, because I'm just trying to pad my bankroll. That's why I cash grab, because I always want to be prepared to buy the dip, because I'm always defensive. Because I think like things have been very sanguine for a while now. At some point, we're all going to have a reality check, and we're all going to know, what does it say, when the tides come down, we know who has clothes on, right? Or whatever the saying is.
Mm-hmm.
Yeah.
Whenever there is a
Swimming
correction
naked.
in the market, we know who's over leveraged.
Yep. Definitely. 100%.
Oh my God, when you buy the dip and it keeps dipping and you see all of these stupid memes, and the only thing that I'm thinking is you're not managing your bankroll. You're playing too big. You're playing too big. You think that things are just going to go up forever and it's going to defy gravity. And that's just not the market that I've ever been a part of. Like, I mean, there's always some serious type of correction, every couple of years. There's something, 10, 15, 20%. It might be short-lived, because we've been in a bull market for a hot minute, right? Since COVID, essentially. Yeah. There was that little bit of in 2022. But for the most part, we had that V-shaped recovery in COVID, and it's been up and to the right. Yep. But during that pain, during that time when things weren't going well in 2022, we saw who was swimming naked. Everybody was crying. A lot of those people left the market, dude, and they have a sour taste in their mouth, and they got nobody to blame but themselves.
Yep.
Give me a thumbs up if nobody's ever made you push a button in your account. I'm going to take words from Mr. Premium of the Option, one of the original wheelers on this channel. We are all CEOs of our portfolios, guys. Your CEO is a reflection of how good you are at this thing. That's just the reality. We don't control pricing, but we do control positioning and how we play the game. So if your portfolio isn't performing and you're the one pushing the buttons, who's to blame? You going to blame me, Kevin? I mean, are you going to blame Jeremy? I'm just saying, are you going to blame me? No, you're going to blame you. You got to put the blame where the blame lies. If you played too big with the IDEXs of the world, like I did early on, I got my ass kicked. I had to learn from that. I had nothing but unprofitable companies that were SPACs, that were speculations at best. And I had to make that pivot because my hamburger stand was generating a lot of premiums, but there was no capital appreciation to speak of, because I was just playing a game of, as long as this company doesn't go out of business, I go through the cycle enough times, I'll lower the adjusted cost basis to zero. And I'm like, cool, but I'm going to live off of premiums and crumbs the rest of my life. Why don't I go do that on a profitable company that's going to withstand the test of time? And now I can legitimately qualify for that capital appreciation. That was the pivot that I made in 2021. Because I was just cash grabbing when I first started this thing, and I realized right away cash grabbing is not sustainable. Excuse me, it's not sustainable.
Mm-hmm.
You want to add a little bit of color to that, Garcia?
Yeah, like for me, like when I rebranded my own Twitter account, it was like, you know, just my last name, but then I added Garcia Capital to start treating it like an actual, you know, hedge fund, or how would a hedge fund present its like updates, or, you know, just it kind of changed my own mentality of how I'm going to approach this. Like if I'm going to be sharing this portfolio to the public, like I'm not going to try to embarrass myself publicly by blowing up my portfolio, you know, on 0 DTE call options, you know. So that's when I realized, okay, this is serious. Like I am going to start, you know, sharing this, and I do want this to kind of, you know, it really did change my mind, you know, my mentality, the way I approach my own portfolio. So
absolutely. Uzi, Hugo, anything to add?
Yeah, so I predominantly, you know, cash grab. But what we also do is we do, let's say, ratio spreads, so that, let's say a stock is going to make a move down and I have a cash secured put. What I do is I have an embedded put debit spread in front of that. So I'm going to make profits on the way down and sell the put debit spread while it's protecting my cash secured put, and then roll the cash secured put. So yeah, cash grabbing for forever is not probably sustainable. When you combine it with, you know, some of the other option strategies where you can make profits and high percentage profits, let's say on like a put debit spread or a call debit spread, to the long side with a ratio, where, you know, you're selling a call above to bring in premium to pay for the long portion. So if I'm going to go long to make, let's say, profits other than cash grabbing, I'm going to help them make the market provide the sources for that revenue. So I don't buy long and pay for it. It's always a credit. So I'm going to take part in the down move with a put debit spread paid for by a cash you could put or two. So it sounds complicated, but it's not. But that's my 2 cents on cash grabbing.
Yeah. So what you're saying is you're using strategies that pay you credits to finance strategies where it's going to cost you a debit.
Correct. So
you're using creative finance is all you're doing.
Correct. Yep.
So I think what it is you're playing big mind capital. You do it a lot like what Option does, like the gentleman that comes on the channel, and he uses a lot because he doesn't have the biggest account, but he has a lot of mind capital that he can throw.
Yes, I've seen Option on your show. He's very good like that. Yeah. Yes. That's the type of strategies. Yeah, but never going into a debit to finance a long position. Always getting a credit for whatever we do.
Yeah, agreed. Hugo, anything you'd like to add before we move on?
Yeah, what part of what Uzi just mentioned, the put credit spread has been phenomenal, and also because of the reduced margin requirements or capital requirements.
Right.
You know, if you're going to sell a put on Tesla at 360, you know, that's 36 grand you need to put aside, as opposed to if you do a spread, which can minimize that to $1,500. So, and then dismantling it if it still keeps going down, I think, I mean, that strategy right there may be worthwhile of its own kind of show, TJ, in the future, because it's been
it's going to be part 2 when we get to backstop trades, poor man cover calls, and spreads. Because
right on.
To me, whenever the market is frothy, I don't really like selling a lot of cash secured puts unless it's on my core 5 put credit spreads. Like that's the way that I'm going to start playing Palantir, because I don't want any part of it at these prices. So I'll just go nibble with put credit spreads. I'm going to get a bigger rate on rate return, a cash on cash return, tying up less capital, making more money dollar for dollar. And I don't have to tie up $60,000 or whatever to do 10 contracts at $60. I'd rather go do 100 put credit spreads, and then I'll manage those and I'll turn them into bona fide cash secured puts at 50, where I'm actually interested in the damn stock. But in the interim, I'm not going to be tying up my capital at prices that I have zero freaking interest in owning these shares to begin with.
Exactly.
So that's a conversation for another day. Stay tuned to part 2, baby. It's coming. It's all coming at you on this series, guys. I cannot thank y'all enough for helping me out with this thing. Give us a thumbs up if you're getting any value out of this thing. So, what are the stock tanks? This is probably the most frequently asked questions aside from how much money do I need to make 6 figures? This is probably the number one question that I've dealt with on the channel in 4 years now. Is be ready to deploy your second 25% bullet to lower your average and sell covered calls. Do this with put priced about 10% lower than the crash stock price. If it goes even further down, deploy the final 50% bullet. If you're worried about the crash, you need to check your temperament, investment thesis, and bankroll. You need to get excited for this sell. And then here's the other one. I'm glad I talked about it. If you cannot own 500 shares, you shouldn't be wheeling it. That is my rule of 500. And I feel like it should be up there with the Gospels of Matthew, Mark, Luke, and John when it comes to this game. If you cannot afford 500 shares of that stock, it is in my heart of hearts. It is my firm belief that you should not be playing with that stock because you don't have enough money to go defend your position. And especially if it's in a stock that is high conviction. Let's say you had $50,000 and you got 100 shares of Tesla at 400, and then this thing dips to $106 or whatever it was. And you don't have any money because you were playing too big with the small bankroll. And now you're like, oh, fantastic. I'm finally making money with Tesla. Well, yeah, but you lost a couple of years. So I think that if you have a beer budget, you need to figure out what kind of beer you like. I think that one of the things, kind of like the shiny object syndrome, is there's a lot of people in the market that have champagne taste on a beer budget. The reason that I gravitated towards cheaper stocks was because I didn't have a lot of money when I started. A lot of y'all don't know that. So it's like, I don't have millions and millions of dollars to work with. So let me figure out where can I manufacture the win $10 and under, because that was the lane that I was in. So sometimes you're in the bike lane. Sometimes you're in the pedestrian lane. I ride the motorcycle all the time, so I'm always looking for the optimum situation when I'm riding my bike. Well, I'm looking for the optimum situation for my portfolio, my temperament, my goals, my objectives that I'm trying to achieve, and I position myself accordingly. That's why I say over and over again, you don't control price, but you do control positioning. And then when you do get handy and dandy with the spreads, now you're able to play bigger with the beer budget.
Mm-hmm.
But you know what you need, though, is you need more mind capital at that point. Because if you're going to be able to play with big boy stocks with little money, you're going to need big boy knowledge. That's why I don't promote that stuff on the channel right away. Because most people with little capital have little knowledge. It's kind of funny how that works. It's very seldom that people with big capital and little knowledge come into the market. It doesn't really work that way, typically. So anyway, I hope y'all are getting value. We're going to keep this thing going. Where are we at here? All things covered calls. Okay, so we're going to stop right there and we're going to get into some examples because none of it makes sense until you can try to really see it. So I want to give you guys examples of cash secured puts that I'm willing to take assignment on and why. I'm going to give you examples of when I would roll this cash secured put, like when it breaks to break even, why I choose to break even, et cetera, et cetera. So we're going to really piece together the movie of cash secured puts. Fair enough?
Yep.
So we're just going to start with them. Anyone? Where's the cash secured put? I'm sure there's one. Here we go. Tesla. Isn't it funny how we just talked about Tesla? So I got a cash secured put at 350. I have a slide over there that says it's a buy at 250. So that being said, you guys should already know that this is a cash grab. Yes or no? Give me a thumbs up if you understand that logic.
Mm-hmm.
So why am I selling a cash secured put on Tesla at 350 if I'm not really willing to own it at 250? Let's have that discussion.
So
top to bottom, chime in.
So I'm guessing you kind of did the math on how much premium you're getting per dollar, and you're kind of figuring, okay, I am getting a good ROI on this money, even if Tesla doesn't tank or it stays flat. Like I'm going to be getting a good return on my money. So that's Well, that's my thought.
Uzi.
Yeah, and it's far enough out of the money that hey, if it does get to 350, that's a great buy right there. If it gets there, especially in a short period of time.
It's a great buy in comparison to today's prices.
Correct.
It's a horrible buy in comparison to where I think Tesla is a good deal.
Right.
So the question is, why would I be selling a cash secured put at those levels? I'm going to give you guys the answer, but this is what I want y'all to ponder. And on the audience, also, y'all can chime in. What about you, Hugo?
I mean, to the justification as to the specific price point, I'm not sure, but to the actual cash secure put, I mean, if you look at the macro events with Elon, Trump getting into the White House, there's a lot of momentum with the stock, so you could be comfortable that it's going to maintain that $400 level that we've seen the past couple weeks. That's why I also sold some cash secured puts on Tesla. So that's kind of my thesis.
So Bill knows me too well. This is exactly the answer. It's because I'm cash grabbing and I'm bringing the adjusted cost basis to zero because this isn't the only Tesla position. So whenever I do portfolio updates, it's real important to understand the totality of the position. So I'm going to start with Tesla. And hopefully this thing will pull up. So you're going to see 4,000 shares at 199. And you're going to see the cash secure put collateral at 350, but all those shares are for sale at 340 for January of 2027. So essentially what I want to do is I want to keep tabs on this position because I'm already underwater on these covered calls. I'm trying to bring money through the door by now selling cash secure puts at 350. And ultimately I want to increase the position to 5,000 shares. That way, whenever I roll these 340 calls, I have these extra contracts that I can sell covered calls on as well to lower the debit, the total debit that I'm going to help finance the debit in order to take this from like a 340 to like a 400 or a strike price. It's going to make me sleep comfortable at night. So there's always a game that's being played within the game. That's why I always tell people there's a lot of people playing checkers, but I'm trying to play chess. So it's real important to look at the totality of a position before jumping to any conclusions, if that makes sense. Now, am I interested in owning Tesla at 350? The answer is not really, unless they say something that changes my mind on the earnings. And then like an analyst, because I'm analyzing our portfolio, right? I would now adjust my price targets and be like, man, I hope the market gives me 350 because I would like to own maybe another 4,000 shares at 350 because this Optimus thing is legit. It's not just a bunch of people smoking pot and talking about it. This is things that are going to happen because the TAM for the robots is real big. It's real big. So I'm looking at the totality of the position, and I'm like, how am I ultimately going to achieve the goal? Lower the adjusted cost basis to zero and manufacture the win. That's the name of the book. So I have a lot of work to do here with Tesla because on the surface, it looks real good, right? Up 861,000. But I also know that I'm not qualified for all those gains because the party stops for us at $340, and this is a very expensive party. If I want to unencumber those shares, we're talking about giving back $701,000 in premiums. So because there's a big issue with this position, I'm trying to right that wrong, if that makes sense. I need some credits to come through these doors because I'm expecting a really big debit within this position down the road. And I ultimately want to increase this position to 5,000 shares, if not more. So I'm just trying to bring some money through the door because I can't really do shit with this position right now, if that makes sense. Did I cover it? Does that make a little bit of sense to you guys? Anything that you guys would like to add?
Yeah, TJ, what's your mentality on matching that exact strike and expiration date with puts?
Yeah, real good question. It just depends on the math. Depends, am I getting enough money on my money to tie up the cash way over there? Because that's another way to get some of the money that you're leaving on the table. But I already know that I'm willing to do two things with this position. If I have big gains in the portfolio, I'm willing to just give the money back and have that tax harvest loss 35 days later or so. I can sell the cover calls again, increase the strike price. Then I can get 60, 70% of the money that I gave back. But now I have a nice little tax harvest loss that helps me for 2025. So there's ways, this is wheeling 301 and 401, right? I'm showing y'all like now the tax implications that I'm looking at as well, dealing with that. Because I have a built-in tax harvest that I can use year over year over year every time I roll this position. That's why I don't mind playing some big positions from behind, if that makes sense.
So TJ, being a technical guy, I just pulled up a Fibonacci on the chart, and 353 is the 61% Fibonacci retracement.
Isn't that a coincidence, Susie? You don't think I know about some fucking charts, bro?
No, I'm saying I know you didn't. I know you know your stuff. Did you look at the fibs? The fibs they line right up with that strike. That's good,
bro. I spend a lot of time looking at astrology for men offline. And 350 was like, okay, this is interesting. And I like the rate of return. It was pretty decent. Yeah. And it's pretty out of the money. You know, you're talking about Tesla tanking on earnings, relatively speaking. And then now I would love to manage it because what if it dips like 320 or something crazy? And I'm like, my goodness, dude, I could finally pick up. Two things can happen. I can pick up more shares. It's no longer going to be 700,000 to get out of these cover calls. It might be in the 450 to 500,000. So now the whole position becomes a lot more manageable and controllable for me. And so I like that fib was right there. Like I had it at 351. So I guess I just did it wrong. But this was like 2 weeks ago when I did this thing. So I don't know if that might have changed since then.
And what do you think you would do, like if it did crash to like, let's say 330, like with those covered calls that you're currently underwater, would you buy them? Would you buy to close them and resell some new ones, or what would you do?
But I'd wait 30 days that I can get the tax harvest loss out of it
before selling a new round.
Yes, you have to, because if not, then it becomes a wash sell. And some people are going to argue in the chat, bro. This is already my 4th year doing it. I'm just here to tell you that that's how it happens for me all the time. I get all these wash sells all the time when I don't wait my freaking 30 days after I close out cover calls at a loss, and then I sell them again. They spank me for it. Not tax advice or anything. I'm just telling you my life story. You may say that that's not how it works for you. You know what I mean? That's not how it works for you, but that's how it works for me. Maybe your brokerage is different. They like you more. But Robinhood seems to just report a bunch of shitty things I do at the end. And guess what? The accountant has to go off of their report. It doesn't matter. The wheel tracker don't mean shit when it comes to taxes.
Yeah. So yeah, I think the only way you can get around that is if you file a day trader's tax status, and then that creates a whole potential red flags with the IRS. From what I understand, I don't think it's worth it.
Tough. It's tough. So anyway, that's how I'm navigating that one. Am I okay taking ownership at 350? The answer is always, guys, it depends. Because we're going to have the answers to the test because there's an earnings report that's coming. So it depends. Right now, I'm thinking it'd be awesome because they're at 415. You're telling me I got paid money to buy them at 350? Sign me up. Then I can sell cover calls on those 350s, bring in a lot of premium to, again, help me finance the debacle that I created over there at 340. So that's one. Let's go over another cash secured put. In phase, $60. This is a good one. So for 2.7, it's a 42 delta. So there's a 42% chance that these things expire in the money. So the question is now, am I looking to take assignment at $60? The answer is not really. Why? Because you always have to look at the entire position before drawing those conclusions. I already have 2,000 shares at 69. So taking ownership of another 2,000 shares at 60, it doesn't really move the needle as far as the average. I'd really be looking to take ownership of another 2,000 shares in the $50, $55 range to lower the overall average. That way I'm still in control of the position and I'm still able to sell cover calls at a reasonable rate above my overall adjusted cost basis, and I'm still bringing significant premiums through the door while trying to build up this position. The ultimate, I'm trying to get to about 5 to 7,500 shares, 5,000 to 7,500 shares in this position. So I'm excited because it looks like the position's about to get bigger, but I don't know if the market's going to give me $50 a share, but I'm also comfortable collecting a bunch of premiums here at 60, 59, 58, 57, and I'm able to still bring some money through the door on the covered calls, because for those of y'all that don't know, this is a covered strangle. Own the shares, selling the covered calls at 75 for the expiration date of 270, while simultaneously I have cash secured puts at $60. Why do I love the covered strangle? Because two things cannot be true at the same time. These covered calls and cash secured puts cannot both be underwater at the same time on the same expiration date when there's a $15 spread between them. Give me a thumbs up if you understand that very basic arithmetic that I just spoke of. Can you say it in your words, Garcia, for the people that maybe don't understand me, or my voice sucks because everybody thinks I smoke weed because of the way I sound? Never smoked weed in my life. I'm saying, can you walk them through that covered strangle on this position right here?
Yeah, let me open up the screen more to see it here. So you're selling the puts and the calls at the same time, right?
Yeah.
You're selling. Yeah, so I see that you're selling puts at a $60 strike, and you're selling the calls at what's the strike on the calls?
75.
75. So you're kind of creating.
And I own the shares at 70.
Yeah. So what I think about it almost is like bowling, where you're kind of creating these two boundaries, where you're kind of hoping the stock kind of, if the bowling ball stays between the two bumpers that you've set up, at 75 and 60, you're going to get max profit on both sides of the trade. Maybe the shares might not appreciate as much. So maybe the max return would be if Enphase slowly creeps up to 74, you can close both legs at max profit, and you got share appreciation, and then you can set up a new round, and you can move up the put to, let's say, 70, and the covered call like at 85 or 80, and kind of move that up little by little and make money while the stock goes up. That's kind of the way I would see the strangle.
Right. Anything that you guys would like to add, Hugo?
Yeah, I mean, you're guaranteeing a win pretty much. One of them will be right. Hopefully both. But yeah, at least one of them will be right. So yeah, the strangle is a phenomenal strategy.
Yep.
When you have conviction and you have capital, the covered strangle is the fastest way, in my opinion, to safely lower your adjusted cost basis to zero. So what's the game here? The game is there was $2,000 times 70. So there was about $140,000, $139,000 invested in acquiring these shares. So I'm trying to generate about $160,000 in premiums to manufacture the win, considering taxes. So I'm like, well, how can I do that if all I'm going to do is sit around and sell covered calls all day? Well, let's see how much those covered calls brought in. Well, that's going to take a while. That's $4,300. I'm like, okay, cool. Well, shit, that's going to take, let's just do the math, right? 4,300, and we're trying to cover 140,000. We're going to get about $4,000 a year. That's going to take 3 years, to get to adjust the cost basis to zero. That's going to be a while. That doesn't work. So what else that I got to do is I'm going to sell cash secured puts simultaneously, maybe I can bring in another $2,000 or $3,000. So how much did I get on the puts for the same expiration date? And I got another 4,500. So I'm like, okay, now that's $8,000. And now in a year and a half, theoretically, and we know that it ain't going to work that way, but if it works out for our manufactured Bollinger Band, if you will, which is what Garcia is talking about, because that is what I call it in my head, is my Bollinger Band is 60 and 75 right now. That's my bottom is the 65. The top is the bottom is 60. The top is 75. So it stays within that sweet spot. I realized the entire premiums on both sides. And the reason I love the covered strangle is because it allows you to stick it out until the end. You could realize a big chunk of that premiums because you're minimizing some of the tail risk. And you're not so directional on one side. Uzi, do you know what I'm talking about there a little bit on the tail risk?
100%, yeah. And on top of what what Garcia and also Hugo had said is that if you didn't know your stock already, you really get a good idea of how the stock moves by selling both sides, the put and the call, and you actually get a better feel on how this thing really does move. It may run up in spurts, but it never goes, let's say, too far past, let's say, like you said, the Bollinger Bands, or it might pierce a Bollinger Band, but then get tucked right back inside. But yeah, I mean, the coverage triangle, I don't do a lot of them because I don't get assigned a lot. But if I do, I love it because you're taking in double, both sides, double the income. Anytime you can take in two premiums and have basically a safe return, high probability of profit. I mean, it makes sense. And it's like you said, it's the fastest way to either get a position to cost you zero or at least to get to your income goals.
Absolutely. And just to walk y'all through this a little bit, because we're really going to harp on this so y'all can understand it, is the way that this position happened is I started messing around with Enphase here recently, and I started selling cash secured puts, covered calls. Like I closed everything out, and then I started dancing with it again towards the end of last year. So I sold 25 contracts at 69, got 3,300. I bought 1,500 shares at 69.08. Sold cover calls on those shares, got 13.95. Bought to close these puts down here for 500, so I made money there. Bought to close the cover calls, so 18.60. So I lost a little bit of money on the cover calls, and then I sold the position entirely at 75.36. So I bought it at 69, sold it at 75, so I made a little bit of money there. And then I was like, let me do it again. And this is where we're at. I bought the 1,500 shares at 70.52. Sold the cash secured puts immediately for 24.50. Then I sold cover calls against these shares and got 33.75. I could have gotten more if I would have utilized the buy right strategy here, but I waited a little while, but my technicals were off and Enphase went the other way. So that kind of bit me a little bit. And then I bought more shares at 66, and that's how we got to the 2,000. And then this is how I sold the cover calls. And then I got the put. So that's how I officially created the covered strangle. So now I'm like, okay, I like this scenario. I really think I can manufacture the win here. If I'm willing to simultaneously keep these cash secured puts on at the same time, I can stay very, very aggressive with the cover calls. And if the stock shoots up, well, cool, I'll make money on the shares. And then I can decide whether or not I even want to defend those cover calls, because the money that I got on the calls and the money that I got on the puts is going to give me a higher break even. So it's going to be a lot harder for me to be leaving money on the table unless Enphase goes to like $85 or $90 a share very quickly. And that was an easier way as opposed to just like buying long calls. Because normally what I would do is I would sell put, sell calls, collect premium, use that premium to finance the long calls, kind of like what Uzi does on his side. But since I'm not overly bullish on Enphase right now, I think that the chances are that it's going to go down a little bit and down a little bit now that Trump's president. I think that it's going to give me a nice opportunity to accumulate for the next 12 to 18 months. And then they're going to have to really show that they turned it around on earnings. And then whenever they get it together, I could potentially build a position of 4,000 or 5,000 shares, maybe with an adjusted cost basis around $40. And now I feel like I position myself to manufacture the win, ride these shares back up to 100, 120. Holy shit, I just made a lot of money on the stock that's been a pain in my ass since day one. So this is, again, I'm playing chess when a lot of y'all might be playing checkers. So I'm thinking 3, 4, 5 moves ahead, and that's what I'm trying to teach with these exercises. Does that make sense? Give me a thumbs up if you guys are getting any value, because guys, I want to just reiterate this. I ain't doing this shit for my benefit. I've made it. I'm doing it for yours. We are doing it for yours. I never come on YouTube again. My life's real fucking badass. That's just the way that it is, because I created that with God's favor. But I want to give back. That's why I have this channel. I want to give back to you guys because I feel like a lot of people have given to me, and I'm just trying to pay it forward to you. I'm not charging you thousands and thousands and thousands of dollars for the little knowledge that I have. But here's what I got. I got real big results. And I say it a lot that the balance isn't an accident. because I have a strategy that I implement, and I have that poker mentality to where I could write out situations. I don't freak out that much. You ain't gonna see me on here and have a price chart. We love admit to death, but you're never gonna see me doing this. You're never gonna see me doing this on the channel where I'm gonna pull up a chart of a company, and we're just gonna sit there and study the price action for 30 minutes on the channel. I don't got that kind of time. You know what I'm saying? That's not what we're going to do here. We're going to sell puts. We're going to sell calls. We're going to collect premiums. We're going to roll when it makes dollars and cents, so that ultimately we can lower the adjusted cost basis to zero, because mathematically that's how you manufacture the win. I mean, everything that I do is on purpose with the purpose, if that makes sense. Anything that you guys would like to add? Because the next position that I want to show is SoFi, and show you how this position is the one that really showed me how to sell puts and calls. Because I'll be able to go through the covered calls segment, and then we're going to be able to do the examples on cash secured covered calls, rolling, buying to close at a loss, and we'll be able to finish it all off with the SoFi position, because it gives you everything.
No, I would just add, if you could go through your backstop trades as well that you do with the cash.
That's going to be part two.
That's part two. All right.
We're already going on 2 hours, so I'm trying to cut it out at 2.5 hours. Stay tuned. The next one's going to be 4-man cover calls, backstop trades, and put credit spreads. How that's my secret weapon to get into stocks when we're dealing with a very, very frothy market. And I want cash flow. I want in on Palantir, but I ain't wanting to sell cash secure puts over here. Put credit spreads is the way to go. And I'm also going to delve a little bit into call credit spreads. I do not like that tool, but it does serve a purpose.
Cool.
Garcia, anything else that you'd like to add before we get into all things covered calls? And then I'll go to the SoFi position, and then we'll wrap it up with all the examples of cash secured puts, covered calls, etc.
No, nothing to add. Looking forward to the SoFi section.
Yeah, me too, TJ.
We're good?
Yep.
Awesome. So nothing on cash secured puts here on SoFi, so nothing to talk about there. So I'm going to utilize the Riot position for more cash secured puts. And again, you guys are going to start seeing a theme here that it is all situational. This is not a suit that one size fits all. So on Riot, I've got the 150,000 shares. We're up a shitload on the shares, thankfully. We've got cash collateral of 220,000, and we've got 130,000 of those shares for sale. So you're going to see cover calls here at 16, and then we got cash secured puts at 11 for Valentine's Day, and then we've got all the shares for sale, or the rest of the shares for sale, at $20 January of 2026. And I've actually bought some insurance as well, because I've used all the premiums to finance these long calls. That way, if it gets out of hand, I can still participate in some capital appreciation, because I think that this thing's going up and to the right. So that's how I set up this position. But let's talk about the cash secured puts, because we're on that theme right now. So the question is now, would I take ownership of Riot at $11? When I first sold these cash secured puts, the answer was a resounding no. Now it's absolutely, I hope it happens. Why? Because we've just had a huge announcement yesterday that they're going to stop they're going to halt the Bitcoin mining expansion to entertain a big deal with a hyperscaler. So they're going to fix all of their cash flow problems once and for all. They're still going to be mining Bitcoin in a really big way, but now they're going to have a steady stream of income on top of that. And Riot is legitimately turning into a pretty big time company. And that is exciting, because Wall Street loves cash flow positive, baby. And Riot is positioning themselves to become very, very cash flow positive, while still participating in this amazing phenomenon that is Bitcoin. So I like that they're becoming, or trying to become, a hybrid company that's going to now command a hybrid multiple of sorts, because now you have some very steady income that's going to come through the HPC AI, the high performance computing artificial intelligence sector, potentially. And then now we already know what Bitcoin's giving you, what it costs. But then now it's like they might legitimately be able to afford to hodl Bitcoin indefinitely, because they have now that other source of income that potentially they're going to be building out. So now I'm excited to take ownership of these shares potentially. But when I first sold these, I was not. I was just cash grabbing. Why am I cash grabbing? Because I feel like I still want to bring some money through the door because the long calls that I bought the leads, those cost a lot of money. And I feel like I'm just still financing those, if that makes sense. So I mean, these were not cheap. These were not cheap right here, guys. So I was just like, I like to get some of that money back. Y'all see they're 83,000 and 71,000, not cheap. So I'm like, well, let me run another 7, 8, 9 rounds of cash secured puts plus the covered calls. Over here, the short dated covered calls, the ones at 16 that expired this Friday. Let me run a few of these rounds, but I'll make sure that I get reimbursed for all of that money. You guys are going to see the covered call premiums that came in over here. They weren't that great. There's a lot more money on the cash secured put side of things with Riot. So again, what I'm saying is it's all situational, guys. I think that a lot of times people get into cash secured puts and cover calls and they want a one size fits all approach, but it's more of an art than a science, if that makes sense. Any color that you guys would like to add to that? And then I'm going to zoom through the covered calls and rolling segment, and then we'll piece it all together with SoFi.
I mean, I really do like that you have the whole position too, like for sale. So you know what your risks are. Like you set up your boundaries, you know what's at risk. So that's something that people who are new to this, they can set their own rules. They don't have to put all their shares for sale. They can do 10%, 25%, half of it. Yeah. So just keep in mind, you don't have to put up all your shares for sale.
You gotta run your hamburger stand. You gotta run your business so that it suits your needs. The needs for it's your trading plan, right? It's your wheeling plan, guys. I'm just showing y'all what I do, what works for us. I've sat down with the family. Hey, this is what we're all trying to accomplish. And we go on this mission and we get it done, right? I'm the face of the portfolios, if you will. But there's a lot more portfolios that y'all don't see. But they all look very similar, if that makes sense. So that's just the way that we run things. I'm not saying that this is the way that you got to run things, though.
I mean, from a chart perspective, I think you're going to see $20. It's definite. And I think once it gets through 2023, it's going to 40. So I guess the strategy would be, well, not the strategy. The thought is going to be how, your strategy to get back in once you get taken out of 20.
Right. But that's a good point. But the reason that I have these cash secured puts and cover calls short dated and I'm collecting those premiums is because I'm also trying to grow the account as tax efficiently as possible. And I want to eventually close out these covered calls for a loss. Okay. And then wait my 30 days. So I have another built-in tax harvest. This is, again, part 2. Stay tuned on how I navigate taxes while I'm doing this whole thing. So I have a lot of positions on here that don't make a lot of sense for the average wheeler. But it's because they just haven't made the kind of money that I'm making with the stock market yet. Whenever you get tired of paying money to the freaking IRS, you're going to start getting very, very creative with your portfolio. I promise you.
100%. Yep. Because
I do not like giving money to those people so they can just send it to another country while we have a bunch of homeless people over here. You know what I mean? I'm like, dude, I don't play politics, but I don't understand certain things. I'm like, dude, take care of your own before you go save the world. You know what I mean? Like, let's make sure that we're all living in abundance before we go, try to rescue everybody else. So, I mean, that's just my thoughts. I'm not a real political person though. But anyway, let's get into. Go ahead.
Yeah, real quick. So the goal with the leaps is really just to recover your premium and then make some, and exercise if it makes sense to. But what do you mean by you would close them at a loss if they're at a profit now? What would?
No. I'm talking about my covered calls.
Oh, your covered.
I want to give back the premiums on the covered calls. That's I have a couple of tax harvest losses in my bag right now. I have all the money that I can give back on Tesla, and I have all the money that I can give back on Riot covered calls. After 30 days, I can put the covered calls right back on, potentially at higher strike prices, and collect 80, 70, 80, 90% of the premium that I gave back. So that debit that I'm losing is going to be super, super minuscule in comparison to the tax savings.
Got it.
And I ultimately will have more control of the position because depending on the cash flow of the situation, because the hamburger stand, everybody's is different. But if I have enough cash flow and if I feel like I don't really need all of that money, well, maybe I just want to control the position and create monthly cash flow now. Because I'm just erasing all the mistakes that I had from previous years because my MO was to roll out and up far in advance, and that's something that I don't really want to be doing anymore with covered calls.
Got it. Why not?
Moving forward, so again, this is the evolution of a Wheeler, right? Like, if y'all have been rocking with me for going on 4 years now, y'all are seeing that the game changes a little bit. It's like Kobe in the offseason, MJ on the offseason. They come the new season and they got a wrinkle to their game, right? They're adding wrinkles. That's what the greats do. So that's all that I'm trying to do, is always add wrinkles to the game, if that makes sense.
Got it. Okay.
Any value? You guys getting value?
Mm-hmm.
Absolutely.
100%.
I'm really trying to get my ADHD under control and keep it there so I can keep giving you guys value here tonight. Because again, this is like legitimately, dude, this is way more for you guys than it is for me. Like, dude, this shit bores me sometimes, guys, believe it or not. Like, it's just like, it just does. I want to go play with my beautiful wife and the dogs and stuff. But I'm like, I feel like God put me in this position and I want to deliver. Like,
100%.
I want to deliver, I want to build the brand and all of those things, but those aren't really that important to me in the larger scheme of things. So anyway, let's get through these slides so that we can really learn on that SoFi position. All things covered calls, guys. What is covered call? Receive adequate compensation for putting shares up for sale while being able to qualify for capital appreciation. Sell covered calls at 15 to 25 delta. That is, again, these are just my parameters. Do whatever you want to do. If the stock is below the 200-day moving average, I sell above it. Why? Because that's going to act as resistance. When it's a cash secured put, it's going to act as support. So I want to be on the other side of that brick wall, if that makes sense. RSI is above 70 because theoretically it's a little bit overbought at that point. Same thing as cash secured put. Stay away from binary events unless you're comfortable with assignment. And sell covered calls on the higher end of the Bollinger Band, which is 2 standard deviations. Rolling. Silver bullet options trading, guys. Rolling options is the key to my success. Knowing I can roll allows me to trade in any market conditions rather than waiting for specifics in the market. Why do I roll? Because I want to qualify for more capital appreciation, especially if you haven't owned the shares for over a year or simply for a lower price of acquisition. Ideal time to roll a cash secure put or covered call is when your break even has been reached. So your covered call is a $10 strike. You receive 50 cents. If it's a covered call, ideal time to roll that covered call, in my opinion, is at $10.50. If it's a cash secured put and your strike price is 10, you receive 50 cents. Your break even is $9.50. The ideal time to roll that cash secured put is at $9.50. It is a lot like swimming. The deeper that you get underwater, the harder that it is going to be to come up for air. I don't know if you've ever been swimming in the ocean or in a pool when you're first learning out and you're like, oh, you want to go hang out over there by the drain and everything looks cool. And then you start swimming up and you see the light and everything's great. But then you didn't realize that it was a little bit further than you thought. So you start panicking a little bit because it's harder to get up for air. That's a lot like being underwater on cash secured puts and covered calls. The deeper you get underwater, the chances of drowning become a lot more high as well, in my opinion.
Yeah. And I know that on a personal level with Palantir, because I was selling covered calls when it breached $40. I thought, okay, 40 is going to act like as a pretty good resistance. That's going to be the all-time high market cap. So I had covered calls at $45. That got breached. And that, when you talked about when your break even gets breached, that's the ideal time to roll. And I saw that in real time that it's true, because I thought maybe I'll just wait it out. Maybe Palantir will take a breather and it might dip back down below 45 and give me a chance to roll. If I had just rolled ahead of time, I would have saved a lot more money rolling up to 50 or 55 than what happened was the stock went up to 55 to 60. And I was stuck with these calls that I had to roll up, and I had to pay it. I had to pay a debit. I could have just let them get called away and start over. But for me, I do have a very, very long-term vision with these shares. So I decided to pay a debit to roll up to like $85, $90 strike. So once those expired, I learned my lesson to be more conservative with the covered calls, because these are companies that I do want to hold on for years. So now I'm selling covered calls at a 1 week expiration, 10 delta. I mean, that's super, super conservative. That's basically, for the amount of shares that I have, it makes sense for me. So I get to manage the position. The stocks can go up 10% in a week, and the covered calls are still not getting breached. So that gives me that leeway to roll.
So let me answer this question. It's a real good question here. Why have you changed to not wanting to roll covered calls up and out in order to have more control over the portfolio? It's twofold. One, there's that, and two, because I want to always maintain the option to sell out of positions completely, the way that I recently did with Palantir, because I've done the numbers and I just feel like I make a lot more steady income being more in cash and just cash grabbing via cash secured puts. I feel like that is my expertise, as opposed to like navigating covered calls and trying to get the capital appreciation. I'm really only trying to do that on 4 stocks right now. Everything else, I ultimately want to be in cash and be selling, get to the point where I have like 10 to 15 million dollars of open cash secure put collateral, and I can like accurately predict how much money I'm making year over year over year. So it just gives me more consistency that I'm looking for, versus the covered call premiums aren't as consistent, because I'll find myself rolling those for debits or you end up leaving a lot of money. It just creates more anxiety for me managing covered calls on too many positions. So I'm creating the coverage strangle and protecting them with the wraparound that I call by having the long calls as well. And we'll get into that, and I'll answer all of those questions with SoFi. I feel like if there's one stock that really taught me how to wheel over the years, it's SoFi, because I've seen a lot with it. I've seen the stock tank, and I got caught with cash secured puts at $17.50 and $12.50, and this thing goes to the $4 range. So I've seen that scenario. I've been in scenarios where I've got covered calls on at 7, and this thing does a moonshot to 11 or 12 bucks. So I've been in all aspects of the game with SoFi. So the longer that I stayed in the game with SoFi, the longer I figured out how to really build out a position so that the only thing I'm not really protected against is a major crash. Because ultimately I'm bullish, right? Like I'm like the Tom Lee of wheeling. Like I feel like that's who I am in the market. I think that ultimately this shit's all going up and to the right. So I wanted to position myself accordingly. So let's talk about SoFi, and I feel like we can cover all the holes here. We'll do more live Q&A. It's going on a little bit longer than I would like, but I think if y'all are getting value, we'll keep it going. If we see 3 values in a row, we'll keep it going, and then I'll talk about the SoFi position, because I think it's going to give us enough examples on cash secured puts, covered calls, and or rolling. So on cash secured puts, we already talked about that. How am I playing this position? So there's 150,000 shares right there. We're doing pretty well on the shares. Pretty rough day today, down 55,000 on the shares. But when you have 150,000 shares, these kind of things happen, right? So we got 6 open strategies. We got covered calls for the shares for sale, all of them for sale at 20 bucks end of the month. It's probably about a 40 delta, I bet, or maybe about a 25 delta. So it is a 27 delta. So there's a 27% chance that these shares will get called away. It doesn't look good on paper. Can you guys tell me why it looks like I'm down so much on these covered calls right now? I just sold these a couple of days ago, and it's pretty far out of the money. Does somebody want to take a stab at that one? Because there's a lot of people that sell options, and they're like, hey, wait a minute. I agree to sell these shares at 20 bucks, and it's not even at 18 bucks, but they only paid, 40 some $1,000 in premiums. And now I got to give back 78,000. So I'd have to lose $40,000 to get out of this contract right now. Why is that? Why is that? You guys want to take a stab at it, and maybe you guys can chime in on the chat as well.
I mean, so the stock must have gone up since the date that you sold those covered calls. It might have gone up a couple percentage points, maybe nothing crazy, but every little percentage point that it goes up, those covered calls, it gets multiplied. I see it all the time where, you sell it and then immediately I could be down 50% or 100% on those covered calls. And I used to panic. And close them at a loss when I first got started, because big negative percentage, they could get scary for someone who doesn't know and someone who's new.
What about you, Uzi? Good observation.
From the looks of it, TJ, it looks probably they're starting to price in the earnings, which are coming up in a couple of days or next week. So when that happens, the IV gets juiced on both the puts and the calls.
Yeah. Hugo.
Yeah, I mean they pretty much nailed it. The contract itself is more expensive. It's worth more because it's closer to that strike price. So basically what the two guys what Uzi and Garcia said.
So let's look at it. On 1248, I sold these covered calls at 20 because I think that 20 is going to be a level that's going to be very, very hard for SoFi to surpass. Now, that being said, earnings are, I think, on the 27th. So I have also played the percentages from the standpoint of SoFi tends to run up into earnings and it does really, really well, but then it kind of retraces a little bit. So I'm like, even if it goes to like 21.50, I feel like it could easily come back to $20. So I played all of that in my mind. And then the other thing that I played, hey, at $20, unless they announce a top 5 institution that got in bed with Galileo, I think that at $20, SoFi is priced to perfection. We talk about Palantir being an expensive stock. We got to put SoFi in the same breath at that level too, and maybe not in similar breath. They're breathing the same type of air. Let's just put it that way, because Palantir is a very expensive stock. I think at $20, we can definitely start talking about SoFi being a very expensive stock, especially if you're in the camp that is just a bank.
Yeah, and I'm looking at the share. It's gone up about 7.5% since you opened those covered calls.
Yeah. So what we do is we look at the chart, right? So it was about 12:30 on the 16th. So we go over here for the last month, and we go 116, 12:30. It's like right here. So it's like right here. So it's 620, and then this thing shot up to 18, and now it's simmered down. So because there's upward momentum on the stock from the time that I sold the covered call, that goes against you because there's a delta, right? There's a delta. This is where we can help you out with the Greeks a little bit. There's a delta associated with this option, and that delta is 27, right? We saw it earlier. So for every dollar that SoFi goes up or down right now, we're either gaining or losing 27 cents on this option price. So that's pretty substantial considering that the average credit was 25. So it stands to reason that since it's gone up about $1.50 since I first sold the covered call, it stands to reason that we're down 100%. Do you guys understand that?
Oh, yeah.
So it looks bad. But it really isn't that bad when you start reading the scoreboard, because what am I collecting every day that goes by?
Theta.
Bingo. So just like delta is like, that's where your eye goes, because we're taught to what? Read from left to right. Well, I go from left to the center, and I'm like, okay, well, I'm picking up 6 cents, and this is going to escalate as we get closer to expiration. So I'm like, well, 4 days of this guy. And if it just stays right where it is, I'd essentially be at even again. But with only less than a week left on the contract. So I'm like, I don't need to panic. It's organic. Plus, I already know that it's not $20. It's $20.25. It's collected premium to sell this covered call. So this is where you really have to understand your temperament and who you are in the market. Can you handle the pressure? Because pressure does two things. It bursts pipes, but it also makes diamonds.
No doubt.
So you need to figure out who you're going to be. Are you going to paper hand the deal, or are you going to diamond hand the deal? Because that just doesn't refer to stocks. It refers a lot to options as well. I'm showing you a little bit of diamond hands here. And I'm like, well, the scoreboard doesn't look good. It's almost like there was a turnover in the football game or something. So it doesn't look good. The momentum changed. The oscillator on the ESPN power, like who's going to win the game, like right now it's not looking real good for you. But you also know that they got to get to 20. The person on the other side of the contract needs that to happen. You only need time to go by. Do you understand the power of options selling as opposed to options buyers?
Yeah.
The gambler needs that to happen, plus the 25 cents in order for them to make 1 red cent. Yes or no? Give me a thumbs up if you understand that to be true.
Yep.
Definitely.
When you sell options, you only need the passage of time to happen. The stock could stay flat if you're selling out of the money, and you can make money. You could actually be wrong directionally as well.
Yep.
And still make money. But whenever you buy options, you need to be right. But they take it a step further. You need to be right by a certain amount of time.
Yep.
So not only do you need to be able to predict when it's going to rain, that it's going to rain, you need to be able to predict when it's going to rain by and how much.
And how hard it's going to rain. Yeah.
I mean, bro, come the heck on.
Yeah, I've noticed the pressure is way off since I started switch from buying options to selling options. Dude, I'm relaxed. I'm looking at a negative 200% return on a covered call. That's way out of the money. And I'm like, Palantir has to hit 80 by Friday for me to worry about these covered calls. And I'm sleeping like a baby. Like, I'm not worried at all.
Absolutely. How many of you guys heard people on X say things like, don't sell covered calls because you're going to put caps on, you're going to put a ceiling on you're going to cap your gains, you're going to put a ceiling on your gains, and you're going to have those shares called away. And there's a lot of what I call misinformation going around the X community and YouTube.
Yep.
I really wish those people would just shut the F up. Because that is just not true. It might be true for you because you don't know what you're doing.
Right.
But do you all give me a thumbs up if you realize that these contracts are very fluid situations?
100%. 100%.
These contracts are that 10 that agreed to go to the movies with you, but she hadn't showed up yet. It's not set in stone. There's no rings on her fingers yet. This is a very fluid situation. You're gonna sell puts, you're gonna sell calls, you're gonna collect premium, and you're gonna roll when it makes dollars and cents. It's all negotiable, guys. It is all negotiable. I have a contract that says I am legally obligated to adhere to the terms of this contract. I am legally obligated to deliver these shares on 131 if SoFi is trading even 1 penny above $20 per share. Do you guys understand that to be true?
And the get out of jail card is your roll capability.
I also understand that I have enough money to buy to close that position and not do anything. So I can take my shares off the market by giving premium back. I also understand that I can buy to close, take the shares off the market, and then put them on the market again at a later date. That is what a roll is. I'm going to give you money back, take the shares off the market, and then I'll live to fight another day when maybe I let it run them $1 or $2, and then I'll put them for sale at 23 or 24. When you sell options, you are in control. You get to decide if you want to sell those shares at that price. You get to decide if you want to take ownership of those shares at that price. And what makes it easier is whenever you have a lot of conviction.
Yep.
If you're getting freaked out at the prospects of assignment, two things. One, that might not be the right stock for you. Two, it might not be the right strategy for you.
Mm-hmm.
Selling options is not for everybody because you might just not be conditioned to play that big, because 100 shares of a stock for a starter position, whether it's one cash secured put, it's a sizable position for most people psychologically. Some people nibble with 1 or 2 shares here and there. They're treating the, I have FaceTimes, and some people act like they're building ETFs for Pete's sake. I mean, they got 40, 50 stocks. I'm like, my bro, you haven't heard of the QQQ? You haven't heard of the SPY? Like, they already did this work for you. Like, give them the little management fee. Like, stop it.
Yeah, that guy's definitely not sleeping at night. Trust you.
Just like, stop it. So anyway, so why am I able to sell covered calls so aggressively on SoFi if it's a stock that I don't actually want to sell right now? Y'all want to take a stab at that question?
I'm sorry, can you repeat that, TJ? What's that?
Why am I able to sell such aggressive covered calls on SoFi right now? Because we can agree this one's pretty aggressive. When I don't really want to sell these shares right now.
Because you can buy them back, like you said. You have the funds to go right back in and buy them at the market price, right? The next day. or that same day if you get taken out.
That's one answer. What about you, Garcia?
I'm gonna guess because you have leaps as well, so you're not worried about the call, So
Yep.
What about you, Hugo?
I would assume you have cash secured puts, so your break even is a lot higher than the $20.
Don't have any cash secure puts at the moment. I did. I closed those out for a profit a week ago. So right now what I have is I have 6 strategies. I have $20 calls, and then I've got 200 leaps at 7 for January of 26, another 200 leaps at 5 for January of 26, another 500 leaps at 10 for January of 26, and then when Noto gets paid, we get paid. I got 500 leaps at 15 for June of 26, and another 1,000 leaps at 20 for June of 26. So 2 things cannot be true at the same time. These covered calls cannot be getting their ass kicked, and these leaves be losing me money simultaneously. Can you guys understand that to be a mathematical fact?
Yep.
This is 1 + 1 = 2. This isn't Chinese arithmetic. This isn't a Chinese option. It's not a negotiation. These are facts. There's no way mathematically that those covered calls would be underwater and those leaves not be printing me money. Do you guys understand that to be a mathematical certainty?
Yep.
So that affords me the ability to collect rent on that condominium complex or that apartment complex that we bought right there. Because I cannot afford to own that many shares on a stock that is so volatile and that does not pay a premium and that is still so small, relatively speaking, that another company like a JP Morgan or somebody could just like make them disappear overnight by buying them out or whatever the case may be. Some of the people on SoFi, that would never happen. It could. They got a lot more money than SoFi. Is it in their best interest? I don't know. I don't have the answers to that test. But this is what I do know. I'm positioned to make a shitload of money if SoFi goes up and to the right. The only thing I don't have any protection here is against the downside. As SoFi traders, a lot of those gains would go away, but I also know that I would be cashing out all of these leaps and locking in wins if SoFi were to dip like 7 to 10%, because I have too many wins here that, something like really started breaking at earnings, I would be closing out these leaps very, very quickly and locking in these wins, and I would be looking to redeploy this cash at some point. Because I'm not going to be the guy that used to be up a shitload of money on SoFi. So I have to also play the game called capital preservation. And it's just, it's something that you have to consider, Garcia, because you're on the come up. So whenever you're on the come up, sometimes we do things that feel a little bit reckless. But whenever you're getting there and you're like, hey, this is real. Yeah. I don't want to give this money back to the market. You want to be the guy at the casino that goes to the cage and cashes out.
Yep.
And you lock in the win. How many people have been to the casino and you see everybody give the money back? Hey, baby, go. About 10 minutes and we're done. My wife gave me the look, guys. She did you know how it goes.
Oh, yeah, no doubt. You're lucky you got this long out of it, TJ.
5'2.5". She has spoken, bro. So anyway, give me a thumbs up if you guys are getting value. Yankee Doodle, if you're a member and you're at the $9.99 level, you qualify for a FaceTime. So I don't know what the issue is here. Call me. You should have the link. You should have the link for the Calendly. Help him out, guys. Members help other members out. That's what we do here. Make sure you're on. If you're again, the WhatsApp group is for the $9.99 level and above. If y'all went in on the WhatsApp, we got to go through Alex. He's the gatekeeper. It's his group, not mine. Sorry, I don't even know how to add you to it, bro. Don't even know how to add you to it. So anyway, any other questions, guys? Ask me anything. You got me here for a couple of minutes. The boss has spoken. So we only got a little bit of time. Part 2 is going to be 4-man cover call, backstop trades. It's a backbone to my strategy, and to put credit spreads and talk a little bit about call credit spreads as well, because that is another way. Whenever you're a little bit worried about selling covered calls, call credit spread is a way that you can go around that and try to generate a little bit of income that way, but with some protection to the upside built in. Garcia, anything for me, or anything from the audience that you would like to address that you might have seen, that you've seen?
Let me see. I don't know if they help each other out in the comments or not, but no questions that I've seen. No, because you already addressed Claudio's question. So no, I think the main one that I was kind of taken aback was you were talking about the wash sale applying to closing out a covered call at a loss. So does that apply when you're rolling as well? So when you roll the covered call, you buy it back at a loss and you open up the new one. Does Robinhood treat that as like an immediate
No,
wash?
they do not. They do not. It's whenever I closed out, I've given back. It was $300,000 on Meta. I gave back $300,000 on Meta, and then like a week later, I sold cover calls again, and they washed out my ass.
I see. Oh, so when you buy to close as one contract, but if it's a roll, it's a different scenario. Got it.
Again, this is just my life. I don't know how it works for you. Maybe your broker's likes you better than me, because I don't fully understand it. All I know is if you sell a security for a loss and then you buy it back or something very, very similar to it within 30 days, it is a wash sale.
Yeah.
And I know when I'm locking in a loss on cover call campaign that just went awry.
Yep.
And if I don't wait my 30 days, I lose out on that wash sale. If I don't wait 30 days and I do something with that ticker on that side.
Yeah, it just seems very inconsistent the way they treat rolling versus just buying a close and selling a new one as two separate transactions.
Yeah, you're gonna have people on the chat that are going to say a bunch of things. I'm just telling you how it seems to work for me. And I've had several accountants look at it and they're like, they're dinging you for that. And I see wash sale, wash sale, wash sale. And I get my little highlighter. I don't know, my wife still has it here because we did it here recently on the report. I guess you could have had this highlighter. And I was just going there with the highlighter. And I'm like, I don't understand all of these freaking wash sales.
Yeah,
because it's something that I need to get better at in my game, because I feel like we're giving away a couple $100,000 a year to the IRS because I don't fully understand that aspect of the game yet.
I wonder if it has something to do with your size too, TJ. You're not an average, guy on Twitter. You're trading large, and it might have something to do with
saying something very correct. I also got a wash sell by buying Leaps and then selling shares at a loss. So I bought Leaps and I immediately sold shares at a loss. It happened on Enphase, and I got wash sold for that.
Man, that's
these brokers are smarter than we are, bro. That's why we're the broker and we're their customer, right? Let's just keep it real. Yep. So they have to protect their rear end with Uncle Sam.
Yep.
And I think they have a lot of, algorithms or whatever you want to call it that automatically they just know whatever the hell you're doing. They just know, and they follow every little freaking move that you make. And there's just not a way around it. Uncle Sam will legitimately help you offset gains with losses if it's legitimate. If it's something that you're trying to circumvent the system, I promise you, dude, the New York Stock Exchange was created 16 years after this beautiful country of ours was founded. They signed the documents under a sycamore tree. That tree is in front of the New York Stock Exchange. Give me a thumbs up if you've taken a picture with that tree before, like I have. So they call it the buttonwood or something like that.
Yeah.
Dude, this is Google this. I'm not lying to you. Google it. And it's just they figured out some things along the way is what I'm saying. The New York Stock Exchange has been around 16 years after this country was founded. We were founded in 1776. New York Stock Exchange was 1792. Google this shit, dude. I used to work at this little company called Goldman Sachs. I'm just not invested with Henry, so I don't have to say it on every freaking screen. You know what I'm saying? Like, that's not how I roll. I don't need to constantly like tell you my qualifications because I'm trying to sell you something. That's not how I roll. Yes, that's a dig at you. Invest with Henry. Stop it. You're great. Stop it. You don't have to be a grifter. Stop it, bro.
You think he's
Stop
watching
it.
this?
You're rich enough already, huh?
You think he's watching this?
Oh, I don't know, bro. I don't know. He's got better things to do. The kid's 30 years old and worth about $10 million. He ain't watching me. But I mean, dude, I wish I'd have figured it out. I mean, dude, he's young and he figured it out very quickly. I mean, kudos to the guy.
Yeah, 100%.
Pretty solid, bro. I've stolen a couple of his plays because I screenshot. I don't watch his videos anymore, but I'll screenshot to see what he's got on. And I'm just he's like I call it my Henry's watch list.
Yeah, I like that he used to show his portfolio. He doesn't anymore though.
Yeah, he's solid, bro. He's solid. I'm not talking shit about him because he is solid. He knows a lot about selling options. I just do think that he's gotten a little bit grifty. But I think that greed consumes all of us at some points in time, right? And I don't know what his number is. Maybe his number is really, really big, so he looks at ways to scale it. I have no idea, bro. I don't know the man.
Yeah,
I don't know, or the kid. He's a lot younger than I am. I don't know him, but I do know that he's really, really good at YouTube. He did this little deal here, the 4-hour deal. And he got 1 million views, yo.
for a 4-hour video. That's
Bro,
crazy.
I'm gonna pull it up. I shit you not. This dude got 1 million views. I was
What does that pay him for that? Is that like a $10,000 payday or something? Or
dude, I'm not even kidding, dude. I'm gonna find it. So it would be, I think it was like options for beginners or something like that.
Yeah.
Options? Was that what
No,
it was called?
it's a good video. His content creation is really good.
Bro, here we go. Dude, check this out. So it's right here.
Oh, he called it a full free course. So,
Dude, look at that, dude. Watch right here. Not even kidding, dude.
yeah.
1.1 million views. I watched about 35 minutes of it on the plane.
Yeah.
And I was just like, dude, and he's freaking doing it, and then like shit populates on the thing because it's all recorded, right? And I'm like, dude, he made like a little movie, like an options movie.
Yep.
I was just like, my goodness, dude, I don't know. He says he's got finance degrees. I think he really worked in radio, television, and film. Like this shit was like really, really, really impressive.
Yeah, it is.
The way, however he's doing it, and he's like, and right here in the little arrow, I think he might be real good with Adobe or some shit. I'm not sure what he used, but I ain't never gonna do that kind of stuff, bro. That is just not.
Yeah.
I don't even have the imagination for that shit. I'll just little life for you, because I think it is comical when he says, "An expert trader trading live," and it's a recording. Like I'm like, I don't know if he understands the concept of being live on.
Yeah.
it was live in the moment when he was doing it. It was live in the moment, right? It's all
That's what I mean, I'm a huge fan of his. He was one of the first YouTubers I found, but I'd look at I'd screenshot his trades as well just to look at them, and I'd see Apple at like 150, 160, and I'm like, what the hell happened?
Yeah.
But it's because it was recorded, a year ago or whatever. So
yeah. Is Jeremy financial education legitimate? I love his macro stuff, dude. And I say one thing I will say about Jeremy, I don't know him personally. This dude knows how to hold on to a stock, dude. You can just hold it, and then all of a sudden you look up, and this dude's up like 500, 600, 700% on stock. Doesn't sell any options or anything. He makes a shitload of money on social media. He has the courses and stuff, so he has other sources of income. Y'all gotta understand that I sell options because that's the source of income.
Yep.
So everybody's running their own race at the end of the day, if that makes sense. So Garcia, if you can give me one or two things that you took away from this thing, hopefully you got some value out of it, and we'll wrap it up.
Oh yeah. For me too, like what I took is everybody's going to be managing their portfolio the way that suits them best. So this isn't a course to tell each individual person how to do exactly what to do. It's giving you guidelines, giving you different ideas what to do with your portfolio. So just whatever suits your, risk tolerance, your attitude towards the market, your own stomach, just kind of work with, and all the lessons too is when you apply these lessons or when you do these things, the biggest lessons will come through the mistakes you end up making yourself in the market little by little. So start small, start with one contract at a time, and just with a small stock and something that won't be too expensive. So you understand and you follow a full trade. Don't go in too heavy too quickly, because then if you make a mistake that way, it might cost you a lot of money.
Agreed. What about you, Uzi? Is there any takeaways for you?
Oh yeah, for sure. Definitely, when you're picking your top 5 stocks, to do your due diligence. Don't rush it. Take your time, because if the top 5 are going to be your money producing and income producing assets, investments, do your due diligence, and like to say for carpentry, measure twice and cut once. Make sure you know what you have, and so that you can sleep at night. Like Garcia said, you want to make sure you know it like the back of your hand, or like your partner, your spouse, whatever, so that you can feel confident that you're doing the right thing when you're selling the puts, your covered strangles, and to know that you've at least done whatever you can do to prevent that ultimate ugly trade or ugly position. I mean, I took so much out of this. I can't really think of anything else right now, but for sure, also to not over leverage. I know I brought that up before too, is, don't put all your eggs into those 5 baskets. Leave a little left over in case, you run into troubled waters, or one of those has an issue, and then you have to pivot to one of your backup stocks.
Yeah. Did that little joke that Henry has about biceps over triceps is absolutely classic. He needs to put that shit on his shirt, bro.
Yeah.
Making money biceps over triceps. He's really entertaining. Hugo, what'd you get out of this, man? And are you think you might be able to join us for part 2 when we do poor man cover call, backstop trade, and the spreads?
Yeah, absolutely. I will be there. Look, the most important thing I learned was the parameters that you have, and I'm really going to study those for the, tracking the 200 moving average and the Bollinger Bands. Really, I want to revert back to that, because I've kind of, you track these stocks so much, you kind of
You
just
get
trade on
lazy, bro. You
instinct.
get lazy.
And you get lazy, yeah. And honestly, I'm not a fan of Robinhood Legend. I used to use another charting system, but I really want to use and get to know Robinhood Legends, use it properly, and get back into those metrics, and use those metrics to just verify and verify my intuition, if you will. But I took a couple screenshots here, and I'm gonna look through those parameters you put on there.
Yeah, we're gonna make sure that that the slideshow is a description on the page. We just got to figure out how to lock it so that people can't edit it.
Right. Yeah.
So if I can get with one of you nerds to help me out with that, then I'll be able to put that as a description. But I don't want the damn slideshow to be gone. And somebody's like, "Hey, message me $1,000 on the slideshow again." I'm like, "Bro, out of principle." So,
Yeah. 100%.
anyways, so what I got out of it is that it's a lot of information. I'm trying to package this into a course, so to speak, because I want to do a seminar in person, because I really want to meet and greet people as I grow the brand. And eventually there is going to be a capital raise for a new hedge fund that I'm launching. I've been looking into these legalities for a little while, and ultimately I want to launch a hedge fund that is funded by the viewers. So essentially, like, we would all put money together, myself included, because if they're not putting their own money up, you shouldn't invest with them, I feel. But eventually, as I go through the licensing process, I want to do a capital raise. This is like 2 or 3 years down the road, probably. But I want to do a capital raise, and I want to trade a fund live on the channel. And then I'll constantly have the investors be panelists and stuff, because what other fund is there where you would be an investor and be able to actively participate and communicate live and in color with the person managing the fund for you, so you have a seat at that table. So that is kind of what I'm gearing towards eventually. I want to do these seminars live for you guys, hopefully 3 or 4 of them this year. If I can get ready, if I feel ready. If not, it'll just be one. And Miami is the destination. The date is to be determined. The location is to be determined. I'm kind of leaning towards the Waldorf, but Hugo's got some ideas, being from Miami. And I want to be able to give you guys between 4 and 6 hours of legitimate information, but then also have panelists with me so we can kind of like have the roundtable discussion. Somebody's with the microphone in the audience, and then we're just fielding their questions, live Q&A for like 90 minutes as well. Catered brunch, lunch, whatever the case may be. And then for like our real deal Holyfield's yacht party after, you know, like that's kind of what I'm shooting for. For the people like if I know you, if I can shake your name, if you got my personal cell phone, you know who you are. For those people, you know, like you guys, you know, the Bill Whites of the world, the Dallases of the world, etc. Mr. Premium were to show up. The people that would know me and I shake their hand and give them a hug, those are the people that I want to hang out with the yacht. And if you're just not in that squad, we're just not there yet. And it's okay. There's time. But, you know, I'm there with some people because they've been rocking with me for a few years. And so that's kind of the idea is I wanted to do the seminar live for you guys. Give out a lot of paraphernalia and stuff to the rent squad. Hopefully the book will be done, all autographed for everybody. Everybody gets the hoodies, the caps, the whole fucking thing, right? Everything. And then, you know, a select few of us go break bread on the yacht and have a lot of fun. So I'm practicing. Y'all heard my target practice. I know I'm not going to be as good at this thing as Invest with Henry, but, you know, I do have results. You know, I do have results, and I'm not one of those going to be tooting my own horn and, you know, putting out the resume and all that stuff. I feel like the portfolio is your resume, bro.
No doubt.
Like, what else is there at the end of the day? We're selling puts, selling costs, collecting premium. Show me that.
That's it.
Show me that. I think the results speak volumes at the end of the day. I got to run, man. Are we good? Any last words? Are we good?
Good.
Hopefully,
Have
you
a
guys
good night.
got value, man. I appreciate each and every one of you guys. We had it on a members only chat to kind of keep the riffraff out of that thing. This is TJ, the Wheel Deal, signing off with Garcia, Hugo, and use the options. As always, guys, stay blue. Stock Screen. Peace out. God bless you guys.
Okay, guys.
Bye, guys.
Good night. Take care, guys.
Mhm.